Excellencies, ladies and gentlemen, from the UfM Secretariat in Barcelona, good morning to you all and welcome to our UfM Conference on MSME Finance during and after the COVID-19, resilience and innovation in the wake of the pandemic. This is Mohamed Al-Razaz from the UfM Economic Development and Employment Division, and I'm pleased to welcome you all, participants, speakers, moderators, to this conference that we co-organize with GIZ, the German Development Cooperation. A little note at the beginning to draw your attention to three things. First of all, there is simultaneous interpretation in Arabic, English, and French. So you can choose whichever language you prefer. The second thing is that to the left on your screen, you will find a blue menu from which you can choose any folder that you like. One of these folders is called Resources. And on this folder, you'll find the agenda as well as some very interesting and pertinent files that you can download. Finally, there is also a chat function which would allow you to chat with any of the participants. And also, should you have any technical problems, there is a help desk icon that you can press and you'll receive immediate support to troubleshoot any problem. This is all from my side. And without further ado, let us start the opening session with a welcoming note in the form of a video message by His Excellency Nasser Kamel, the Secretary General of the Union for the Mediterranean. I will ask the colleagues from the agency to kindly play the video.
Excellencies, ladies and gentlemen, I am pleased to welcome you at this UfM conference fully dedicated to the most tried and trusted vehicle of job creation and economic growth decade after decade, namely micro, small, and medium-sized enterprises. Every single year, jobs are created, but also jobs are destroyed across our region. And this will be further accelerated on the back of the digital transformation and the technological disruption that have been changing the labor market landscape in ways never before conceived. But MSMEs are particularly well adapted to innovation and creativity. We only need to check our smartphones to realize that there are countless small companies that run entire businesses from a mobile phone app. Promoting sustainable and inclusive economic human development and digital transformation in the region are among the priority areas identified for the UfM work in the coming years in our UfM co-presidency statement emanating from the 5th UfM Regional Forum held on 27th of November 2020. Ladies and gentlemen, MSMEs are of paramount importance if we are to achieve this mandate. The UfM Secretariat has always been supporting startups and MSMEs in the region through its flagship initiative like the Med for Job, which has already supported over 800 MSMEs so far. In the entire Mediterranean region, businesses and the livelihoods connected to them are threatened by the economic consequences of the COVID-19 pandemic. Consequently, the challenge MSMEs face, especially the lack of access to finance, have become even more serious. Meanwhile, the UfM, together with the German Development Cooperation, has recently launched a grand scheme for employment promotion and job creation in the knowledge and conviction that MSMEs are a key target to help during the pandemic, and that's why the scheme was focusing on them. Of course, the big question remained to be, how can we support MSMEs in a meaningful way? How will the pandemic change business models? And how can we devise innovative sustainable, and inclusive financial instruments for MSMEs. How can we employ new technologies to this end? These are the main themes for today's discussion, which we are pleased to co-organize, of course, with our partner in the German Development Corporation. Without further ado, I wish you a day of fruitful exchanges, knowing that we will surely take into account the key recommendations for our coming actions and activity. Thank you very much.
Excellent. Thank you very much, Excellency. And we proceed directly with the opening remarks, starting with Mr. Mohammed Amairi, the Executive Manager of the Financial Stability Department at the Central Bank of Jordan. Mr. Amaira, thank you for joining us today. And without further ado, the floor is yours. If you're ready, we are all ears.
Thank you so much. Good morning, all. On behalf of His Excellency Dr. Ziad Fariz, the Governor of the Central Bank of Jordan, I would like to thank the Union for the Mediterranean for inviting me to speak at this esteemed conference. I hope we all gain from this amazing opportunity to discuss the impact of COVID-19 on MSME finance and share our experiences on how we were able to best maintain the resilience of these enterprises and make use of technology and innovation in continuing to do so. Ladies and gentlemen, as we all know, the micro, small, and medium-sized enterprises are economically important to most countries worldwide and considered the essential cornerstone of the economy. They not only contribute to a country's GDP, but also create and provide job opportunities, as well as a role in supporting sustainable finance. In Jordan, MSMEs are one of the main pillars in the Jordanian economy and constitute over 90% of total projects operating in the kingdom. Furthermore, MSMEs contribute to about 40% of the GDP and employ between 40 to 60% of the official sector labor force and account for about 45% of total exports and active investments. COVID-19 pandemic has and still has a huge impact on most economic sectors, if not all. Primarily, the most prominent impact is on MSMEs. Unlike large corporates, MSMEs have been facing many challenges even before the pandemic, and these challenges have escalated during the pandemic. One of the most important challenges for them is access to finance. The government of Jordan and the Central Bank of Jordan believe in the essential role that MSMEs play in the Jordanian economy by reducing unemployment and combating poverty. Therefore, the Central Bank of Jordan continued its role in supporting and encouraging these companies even more so during the pandemic. As part of its response to COVID-19 pandemic, the Central Bank of Jordan launched a stimulus package amounting to about 2.7 billion Jordanian dinar. It represents about 8.6% of GDP. This package included many initiatives, one of them launching a special financing program dedicated to MSMEs, amounting to around 700 million Jordanian dinar, offering soft financing with relaxed conditions and low-cost financing guaranteed by Jordan Loan Guarantee Corporation with a guarantee rate of 85%. In addition, the Central Bank of Jordan has an internal development program to finance and support selected economic sectors, including SMEs, in which it reduced the financing cost of this program as a result of the pandemic from 1.75% to 1% for projects outside the capital Amman, and from 1% to 0.5% for projects outside Amman, in order to serve more the remote areas and the underserved areas. Adding to these two programs, the Central Bank of Jordan receives low-cost financing from regional and international financial institutions such as the World Bank, the Arab Fund for Economic and Social Development, and the International Fund for Agriculture Development, in order to raise funds for SME sector. It's worth mentioning that prior to the pandemic, the Central Bank of Jordan, in collaboration with the government and the World Bank, has established a private equity fund, which is called Innovative Startups and MSMEs Fund, with capital amounting to about $98 million in order to invest in the capital of innovative SME projects. This fund is a very important fund because it's for investing in the startups and innovative SMEs project with private equity investments. Another important challenge that face MSMEs is lack of financial and managerial skills, which makes it difficult for them to acquire financing and makes them unbanked. Therefore, it's very important to provide them with technical assistance and building capacity programs in order to support them in accessing finance. And I think lack of skills and experience is one of the most important challenges. So focusing on dealing with this challenge is very important to support SMEs. As for technology and innovation in the financial system, the pandemic has accelerated the process of digitalization. Although Jordan is a pioneer in digital payments and use of new technology and innovative services throughout the financial system, especially the banking sector, COVID-19 has made it necessary to use more technology and digital payments during this time. As a result, the Central Bank of Jordan, like most regulators, has issued several circulars encouraging the use of digital financial services and facilitated their use across the kingdom. For example, it permitted the use of mobile ATMs in rural areas. No fees were associated with use of ATMs. Remote opening of e-wallets and ease of remittance transfers were available, as well as other facilitated payment services for individuals and companies, especially SMEs. Due to these regulatory responses, all banks were operational during the corona lockdown period and catered to the financial needs of all citizens. In an effort to continue its progress in the area of financial inclusion, and being the first country in the MENA region to issue a national financial inclusion strategy, which has been launched in December 2017. The Central Bank of Jordan is currently working on a green finance strategy to promote sustainable finance. Supporting SMEs is a vital part of this strategy, as most SMEs lead to the support of sustainable finance compared to large corporates. This is mainly due to the nature of SME projects, as most are environment friendly and include projects related to agriculture and renewable energy sectors. Finally, I would like to emphasize the importance of this conference and the opportunity to learn from each other, share beneficial experiences, and discuss the challenges ahead of us amid COVID-19. Together, we could come out with other policy responses to advance financial inclusion of MSMEs. Again, I look forward to this conference and productive outputs out of it. On behalf of the Central Bank of Jordan, thank you again for your kind invitation. Thank you so much.
Thank you very much, Mr. Amairi, for these eye-opening statistics and reflections. And now the floor goes to Ms. Regine Kwalman, Head of the Division for North Africa at GIZ. Ms. Kwalman, if you're ready, the floor is yours.
Thank you very much. I am ready. Excellencies, ladies and gentlemen, I'm pleased to also welcome you to this UfM conference, which is another product of the close and fruitful cooperation that UfM and the German Development Corporation have had. My special thanks go to the UfM colleagues, the whole team, and certainly to the Secretary General, His Excellency Nasser Kamal, on behalf of GIZ. As you are aware, today's conference is addressing an extremely important challenge for economic growth in the Mediterranean region as a whole. And I would like to repeat and underline what His Excellency has already said. MSMEs are of paramount importance if we want to achieve a sustainable and inclusive economic human development in the region. The fact that MSMEs account for half of the world's GDP and 2/3 of all jobs, all the statistics have just been stressed by the previous speaker, impressively demonstrates their immense importance both for national economies and people's lives. Job shortages were a major challenge for many countries in the region even before the coronavirus pandemic, and tragically, more than 200 million full-time jobs have been lost in addition due to the pandemic's impact. The funding gap for MSMEs equally was already huge before the crisis, and it is bound to increase further. Access to finance is undoubtedly an essential aspect for MSMEs to strive and contribute to growth and job creation in the aftermath. The decline in revenue is leading to liquidity shortages that threaten the survival of many viable enterprises. Despite government support measures, we see that reduced lending by traditional banks and the decline of other sources of finance pose a risk to business development, according to OECD studies. At the same time, however, there's numerous opportunities. A large proportion of the region's population, many highly educated, is entering their most productive years and opening the potential for demographic dividend. Digital transformation, technological progress are reshaping finance by opening unprecedented opportunities, by radically simplifying processes, and by making them more efficient. Despite many challenges, such as data and customer privacy issues, this, as well as the emerging alternative financial service providers, can improve access to financial services for MSMEs and thus spark more business potential. Preparing ourselves for such a transformative change includes, of course, the challenge of aligning financial systems to support the transition to a low carbon, more resource efficient and sustainable economy. And that, I think, is a personal issue for myself, as for many of you, to address these points at the same time. The recently published Sustainable Finance Strategy of the German federal government clearly highlights that sustainability risks can entail financial risks for the real economy and for the financial industry. So taking sustainability criteria into account strengthens and stabilizes the whole financial system. For the Federal Ministry for Economic Cooperation and Development, the BMZ, such aspects are essential components of an effective development policy. This requires effective cooperation at all levels. Cooperating with our neighbors in the Mediterranean region is hence of particular importance in order to be able to meet the many challenges we face. Supporting activities to promote sustainable finance in partner countries, as highlighted by the German government's Sustainable Finance Strategy, is in this respect an indispensable course of action for implementing the SDGs and strengthening financial market stability, including at the enterprise level. In the spirit of close and effective cooperation necessary for this tall purpose, we as Deutsche Gesellschaft für internationale Zusammenarbeit, GIZ, are now looking forward to the exchange ahead on 3 important topics in the context and course of this UfM conference. We, at the same time, continue to be committed to our partnership engagement in many countries of the Mediterranean region and at the regional level to jointly achieve sustainable socioeconomic recovery from the pandemic. With this, I will thank you again for including me in this opening session, and I wish you very fruitful deliberations for this day.
Thank you very much, Ms. Qualman, for stressing the dimension of sustainability. Of course, from our side, we place a lot of importance and emphasis to the partnership that we have with GIZ, BMZ, the German Development Cooperation. I thank you very much. I could not agree more. And now the floor goes to Dr. Alfred Hannig, Executive Director of the Alliance for Financial Inclusion, to deliver his keynote address. Mr. Hanning, if you're ready, Dr. Hanning, sorry, if you're ready, the floor is yours.
Well, thank you very much for this opportunity. Nasser Kamel, UfM Secretary General, Regine Qualman, Head of Division for North Africa at GIZ, Thomas De Luca, SME Finance Forum Ambassador, distinguished guests, ladies and gentlemen. We are very honored to be here today to address this 2021 UfM Conference. Just wanted to thank you for inviting the Alliance for Financial Inclusion. As you are aware, the Alliance is a global network of policymakers and regulators who together strive for better and high quality access to financial services through what we call smart policies and regulations. We work actually on many policy areas, including MSME Finance, where in fact many of the members, the financial regulators, have a role to play to improve the access, usage and quality to these financial services, especially for the disproportionately affected groups. Now, AFI is in place for more than a decade. As you're all aware, we entertain a long-standing partnership with GIZ in all this. And I think over the years, AFI has become a very practical organization, where I think in the first place, this is all about getting things done. It's a very diverse network where we work a lot on these convergence issues. That means financial inclusion related policy topics and regulatory issues that are relevant for everyone around the world, not just for one group of countries. We do not distinguish so much between the different regions or the types of economies. I think the topics that we are looking at are relevant for everyone, and our belief is, of course, that everyone can learn from everyone. And I think this has become even more relevant for us as a result of the pandemic that we are all going through. Now, to date, members have reported on the development and the implementation of what we have counted over 800 policy and regulatory changes to enhance financial inclusion in their countries. And we have seen just in 2020 137 of these policy changes. And our members also tell us that 63% of the members actually say that the collaboration within the network has had a strong attribution on these policies and regulatory changes that they have implemented. All in all, we can safely say that the activities have contributed to including around 680 million people brought into the formal financial system over the last decade. Now, as you can easily imagine, and I suppose that's why we are also here, SME Finance plays an important role in all this. And of course, as I said earlier, the financial regulators play an important role in bringing this service to the small and medium enterprises. In the Mediterranean and the Arab region, we are proud to count policymakers and regulators from Egypt, Morocco, Tunisia, Palestine, Jordan, Iraq, Mauritania, and Sudan as very active members. And particularly after the COVID-19 outbreak in early 2020, which in fact has hit the global economy, we saw also vibrant activity in this region. In fact, not only to mitigate the immediate impact of the crisis, but also to position the policy and regulatory changes towards an effective recovery from this crisis. There are numbers I think that you're all aware of, like, for example, the World Bank Global Economic Prospect given to us estimated global losses in GDP growth currently around 5.3 percentage points below pre-pandemic projections, or about 4.7 trillion US dollars. And we also are aware that an additional 49 million people, a disproportionate number of whom are women, are expected to be pushed into extreme poverty. According to the IMF, in the MENA region, the real GDP growth is projected to pick up 4% in 2021 after having slumped by 3.4% in 2020. Now, globally and in the Mediterranean region, the pandemic has caused disproportionate effect on MSMEs, the backbone of the global economy, accounting for 2/3 of employment globally and between 80 and 90% of employment in low-income countries. And according to the Arab Monetary Fund, the unemployment rate in the Arab region is forecasted to increase from 4.2 to 5 percentage points. Now, we have seen quite a number of effective policy responses from AFI members. These can be viewed on the website, where we have actually uploaded a policy dashboard where you can actually see the most extensive source of policy responses provided by the members to mitigate and to recover from the economic impacts of the pandemic. Let me just emphasize also, in alignment to the earlier speakers, digitization has the potential to increase MSME productivity, reduce the costs, and help avoid a complete economic halt for MSMEs during the COVID-19 crisis. Many MSMEs have implemented an innovative contactless method of delivering their products and services, demonstrating their ability to change their business model to stay afloat. And the regulators in the Mediterranean region, just to give you an example, have a great role to play in this. For example, in Tunisia, the Banque Centrale de Tunisie launched the new status of payment agent and agreed one player paving the way to other providers and to innovative digital financial solutions, such as digital payments, digital insurance, among others. And additionally, the Arab region is developing fintech policies in order to create a sustainable framework for digital finance environment. I actually would also mention that focusing on MSMEs, a truly green and fully inclusive recovery would also enable mitigation of contributions to climate change. There's a clear business case for green recovery, and this includes MSMEs and the various needs of the women's market. Linking the inclusivity and sustainability criteria with the UN Sustainable Development Goals will facilitate the alignment of national recovery programs with the EU and international policy agenda. I would just like to close now with an expression of hope. I hope this conference will showcase pathways for supporting MSMEs by taking into consideration a greener, a more gender-sensitive, and also a digital economy approach in the Mediterranean region, amidst maintaining macro stability and ensuring no one is left behind. On this note, I will leave you to take forward your discussions and wish you very fruitful deliberations. And once again, thank you for inviting us.
Thank you very much, Dr. Hanning, for this optimistic message of hope. I totally coincide. Congratulations for the impressive results so far, and thank you very much for sharing with us these insights and figures. I now have the pleasure to invite to the floor Mr. Thomas De Luca, the SME Finance Forum Ambassador, who, by the way, has a paper called A Call for Insights in the resources folder, again, to the left of your screen in the blue menu that you can download. Mr. De Luca, the floor is yours.
Thank you. Good morning, everyone. I'm pleased to be speaking to you today from the UfM Conference on MSME Finance during and after COVID-19. I'm speaking to you officially as an ambassador for the SME Finance Forum, which is founded by the G20 and is managed by the IFC as a global membership network to expand access to finance for SMEs. In my day job, I have, for most of my career, been a fintech entrepreneur across Asia, EMEA, and the Americas. Specifically, for much of the past decade, I built and operated a company focused on helping banks to improve their lending to small businesses, along the way establishing proprietary direct on-balance sheet lenders in Hong Kong, Singapore, the Philippines, and the United Kingdom. As a lender to SMEs in developed and emerging markets, as an enabler for bank lending to SMEs, and indeed, as a small business founder myself, I hope I can offer a rather unique perspective to this distinguished audience as we set about on a half a day of immersive, substantive dialogue for the improvement of SME access to finance, as we wait with hope to see the back end of the pandemic. The goal of this conference is to encourage countries to develop a more conducive environment to broaden the range of available options and actors to better support the needs of MSMEs and, ultimately, of the countries themselves. In that regard, then, let me now kick off the brainstorming of options with a few broad lessons of my own experience. Firstly, timing matters. Pre-COVID studies reported that nearly 75% of small businesses maintain a cash buffer of less than 60 days. In fact, of that, half of all businesses have less than 30 days of cash buffer. This provides policymakers precious little time for the design, approval, implementation, and delivery of financial support in a meaningful manner. In many countries, 12 or more weeks had passed from the onset of the crisis to the passage of relief legislation. For many SMEs, far too late. Going forward, governments should learn from the experiences of the past months to prepare a pre-agreed recipe book of financial stimulus and support products for SMEs. When the next crisis hits, it will again be too late to entertain the policy debates of small business finance minutiae. A second lesson: financial infrastructure matters. Specifically, the physical and technical infrastructure for deployment of SME support must be upgraded. The pandemic clearly highlighted the extent to which many banks had failed to digitize their services for small businesses, which, coupled by the lack of policy preparedness, only exacerbated the delays in delivering the needed support. In many places, banks were ill prepared to support customers in the circumstances of a pandemic. Lockdowns and quarantines meant bank staff could not attend to offices to meet with or even answer calls from SME clients. Even where systems were in place for digital loan applications, banks were often not prepared for the sheer volume of demand, with the result that even some technically advanced banks had to shut down their systems so to handle the flow. A third key lesson: regulation matters. For example, well-intentioned but inward-looking regulations for protection of personal data impeded technology delivery through the cloud, precluding implementation of capabilities for open banking, loan automation, and even e-payments, and indeed for even making working from home for bank staff impracticable. In many places, the failure to recognize e-signatures or scan documents rather than originals necessitated the small business owner to file physical loan applications in person, with overloaded, socially distanced bank staff working to clear a flood of applications. E-signatures, data nationalism, document digitization, these are all issues which regulators have been debating at least since I graduated law school more than 25 years ago. The pandemic has shown just how short-sighted these debates have been. Finally, renewal matters. Government policy must recognize that a crisis will eventually cause many small businesses to succumb, even if certain forms of aid can be made readily available. However, whilst a crisis may be fatal to many small businesses, it is also likely a font of new opportunities deserved of an entrepreneurial vigor and financial support. Therefore, policy should recognize the distinction between the small business entity that is moribund and the entrepreneur behind the business, who will likely be very much alive and seeking quickly to start a new means of income for his or her loved ones. In this regard, Government policy should emphasize quickly spinning out any assets of the failed business into more productive hands, and separately, helping this failed small business owner to restart a next venture. The former likely requires reform to bankruptcy and insolvency laws, including the practical infrastructure upgrade to support a large surge in bankruptcy filings, perhaps in an environment where the courthouses are closed for physical business. For the latter, it may mean helping the entrepreneur to improve a credit rating shattered by the crises, or perhaps obtaining access to certain pools of startup capital. In closing, let me return to the theme of this conference, resilience and innovation in the wake of COVID-19. It is fair to say that the world has seen plenty of both during these difficult times. But as we look back, let us do so with an eye for the future. As we enter what one can hope is a period of relief from this crisis, let us prepare ourselves for the next one with package relief legislation for SMEs, financial infrastructure to support its delivery, regulatory reforms to promote digitalized banking, and policies to enable failed business assets and owners to get back into productive use. Sadly, a quick review of current headlines offers any number of reasons why we should hurry our preparations for the inevitable next crisis, whether it is driven by environmental factors or some other low probability, high impact, and yet foreseeable event. Let us act now whilst the opportunity is ripe. Thank you and enjoy the conference.
Thank you very much, Mr. De Luca. You mentioned that when the next crisis hits, it would be too late to entertain a policy orientation or response. I agree perfectly, actually. So again, thank you very much, Mr. De Luca, and all the speakers in this opening session, which is now concluded. So stay with us. In exactly 1 minute, we will start panel 1, the first panel for today. Meanwhile, we will have the agenda for this panel displayed on the screen. So see you in 1 minute. Excellent. So we're back. Welcome to our first panel for today, dedicated to the impact of the COVID-19 pandemic on MSME finance. I'm very pleased to welcome our dear friend and partner, Professor Dr. Reem Ayadi. She's, of course, the founder and president of the Euro-Mediterranean Economists Association, EMEA. And she's also professor at the Bayes Business School, City University, London. Dr. Ayadi, it's always a pleasure to have you with us. You will be the moderator for this panel, so please, the floor is yours to introduce the panel and the speakers.
Thank you. Good morning, everybody. I'm very happy to moderate this panel. Very important, very timely. Thank you, Mohammed. I would like to thank all the colleagues at the UFM for this very important event today. So this panel, it's an important one because really it's of course, we are still in the middle of the pandemic, but at the same time, access to finance to SMEs has been really a complicated issue over this period. So if we look, for example, after almost 1.5 years of COVID, the global economic impact has been quite profound. There has been many mitigation actions to tackle the deadly pandemic, such as, for example, national lockdown, social distancing measures, but those measures have also had some impacts, negative impacts on the companies, on the SMEs, on the economies as a whole. And this, we could see it already on the loss of economic output over globally, which is up to 4.2% in 2020, which is quite a lot. And let me say that Europe also has been largely hit. Now, again, uncertainty is still looming because clearly the scope and the speed of recovery are not known yet. Also, the global inequality of vaccination remains persistent. And we do not know whether the interest rates will remain stable, whether or not they will increase. Now, MSMEs, micro, small, and medium-sized enterprises, and startups, entrepreneurs, all of these, what I call, and you already said it previously, they are the backbone of the economies, were almost at the epicenter of these disruptions from the start of the pandemic, with a liquidity crisis threatening their survival. And some of the SMEs have also been closed. Now, the key issue here is the cash reserves, which are clearly facing depletion, and the debt continues to increase and to be more expensive if the interest rates will keep increasing. Now, if we look at the surveys of the OECD, for example, who had dedicated to the MSMEs across the world, it shows that 70 to 80% of the SMEs globally have experienced substantial decline of revenues during the crisis. And revenues are extremely important for cash flows to pay the debt and also to grow. So I would like also to make a mention that young firms, startups, and also self-employed women, youth, minority businesses have been largely affected. Now, I also want to emphasize that, as mentioned before, significant numbers of SMEs have closed, but yet not reflected in the bankruptcy rates. So we will see bankruptcy rates going up in the future. Why? Because in all countries, there have been major liquidity support measures, and also there are some countries who even temporarily changed the insolvency procedures, which in fact not giving the real picture on the bankruptcy rates. As I mentioned, governments have done major efforts globally to deal with the pandemic and to support SMEs, entrepreneurs, also avoiding a liquidity crisis, which could also generate a solvency crisis. They have done deferral of payments, job retention and wage subsidy schemes, financial supports, for example, via debt channels and equity possibilities to enhance the equity structure or the equity positions of some SMEs. And also there has been a structural support measures using digital means. So in fact, nowadays we can see really a serious, complex balancing act in the short, medium and long run, addressing very important challenges for MSME development, which again is the backbone of economic development and economic growth. So how to continue supporting and avoiding, in fact, the liquidity, how to continue the support and to avoid the liquidity crisis to further impact the SMEs. And second is how to and when to exit those emergency support measures, not to further hamper the possibilities for the SMEs that have survived the crisis, and how to ensure that the policies that are in place will help the SMEs recovery over time. This is extremely important to really do the measures, implement the measures in the right time. Now, around these lines of this session, I would like to introduce the three panelists. My friend Nagla Bahar, she is the Managing Director of the Egypt Credit Guarantee Company and chairwoman of the Euro-Mediterranean Guarantee Network. The guarantee schemes have had a major role worldwide, and we can hear how they helped the SMEs to continue producing and maintaining the revenues. Second panelist is Tarek El-Qadi, who is the founder and chairman of the Mediterranean Business Angel Network. So he will tell us what these business angels have done and what should be done for the recovery. And Mr. Tarek Tawfiq, who is the Vice President of Business Med and the Vice President of the Federation of Egyptian Industries. So 3 panelists, and I would like to give first the floor to Nagla. Nagla, please, you have 7 minutes to share with us the experience of the guarantee schemes, please.
Thank you very much, Reem, and thank you very much. I would like actually to extend my thanks to UfM and the German Development Cooperation. UfM had been playing a real role, across this pandemic with the different initiatives, different meetings, conferences they initiated to allow us all to share what we have, which is a very, very important element and tool now, sharing what we have. Everybody talked about. I'll go directly to the topic, and what Reem highlighted, and before, Ambassador Nasser, and followed by all the opening sessions, that we've been listening to everybody focusing on the role of the MSMEs. I'm not going to repeat its importance. I'm not going to repeat the challenges that all these MSMEs are meeting and facing now, considering, their kind of fragile nature or something. As Reem highlighted about the guarantee schemes are a risk mitigation tool. So if this risk mitigation tool is not going to play its real role now, when we have an unprecedented risk that we've never seen before, with an extreme high level of uncertainty, I don't think when we can be able to play our role. All the guarantee schemes all over the world, had been witnessing real support from our governments. As you all highlighted, all governments and policymakers had been very active and very actually unexpectedly out of the box thinking, towards how to meet the effect of the COVID. Most of governments, if not all, took immediate action and spontaneous actions to respond to the pandemic consequences that we've never seen. It was not only a health crisis, but it's something that affected the economies and lives of people. All of them, and central banks, in coordination with the governments, played very active role, considering their kind of, how can we say it, they were into real advanced development and restructured, enabled them, to play a very active role within the pandemic, and within the actions taken. Within this, actually, we as guarantee schemes have been witnessing lots of support from our governments, where in reality, for example, I can say for Egypt, for example, our funds had been increased by 1,000% across only last year. What that actually implement or reflect, it reflects the use of the risk mitigation tool, the use of this risk mitigation actually to overcome the crisis that we're witnessing. And why? Because within the guarantee schemes, you can kind of push the needed immediate action. You can push it slightly until things will stabilize. Even if governments, are injecting funds, to the guarantee schemes, the effect or the weight of these funds will not impact the budget of the government until the default occur, which we can push it through the guarantee schemes and applying our mechanics and utilizing, the advanced tools that we have. And this is what we've been doing during last year, just initiating out-of-box products and models to enable our MSMEs to overcome their crisis. We have to accept the fact, as you all highlighted, Reem, you highlighted, and the others, everybody highlighted, yes, this crisis will be having a real effect. It's not yet there. It had been postponed, but reality will come on board sometime. This reality that's coming on board will include lots actually of bankruptcies SMEs, and we have to meet this fact. We need some of them will be kind and in between positions. So those are the SMEs or the MSMEs that we need to help and assist to enable them to overcome the troubles, the problems that they are meeting. Some could be really excel and maybe highly needed. You highlighted fintech, we highlighted digital. Of course, all those who are working within this sector, we can see them thriving during last period. But there is a lot across those MSMEs working in the agriculture sector and working in the industrial sector. If you look, for example, at the supply chain itself, it had been completely changed, so even the form of finance addressing the supply chain, should be changing. So everything around us, is changing. So there is no more normal. There is no more how we used to do the business, but there is a lot of think out of the box. There is a lot about actually how can you tackle all these new by new. So at the level of the guarantee schemes, number one thing we've been working on across last year and now is changing our business model. Our business model that we used to work before 2020 is obsolete. We cannot anymore work it out. So we have to change it, and we did. And afterwards, we have actually to think in a completely different way, enabling us to do not only to we doubled the portfolio. Our colleague schemes, some of them actually did like 3 times their portfolio size in 2020, and 5 and 6 and 7 were all actually exceeded all expectations. But how are we going to handle this? How are we going, with the government, with the central bank to meet when these funds, or these supports should phase out? As you mentioned, Dream, how are we going together to apply the exit? How are we going actually to deal with the expected and known, high default ratios and the high default within different clusters of the SMEs and across the board, and some of them, of course, are badly affected. We started, as we said, firstly, we cannot go on doing the normal conventional guarantee that we used to do. It's just guaranteeing facilities and loans and blah, blah, blah. Forget it. We have to go into also investment. We started the equity, not only the normal equity. There is an equity, startups. Let me focus on startups. Maybe I linked this to equity, but anyhow, yeah, it's a startup so that we need to focus on. Equity is a model, and we should actually think about another thing, because not all markets, particularly in this southern part of the Mediterranean, are ready to apply the equity model. Equity, the supply and demand size. Do we have the sufficient supply and demand capable of serving this size of this segment? I don't think so. No, it's not. I don't think, I'm almost sure. So we have to think. We don't have to wait. Nobody will wait for us. So we thought about another model, like a specially structured finance for the startups with a high guarantee coverage to encourage banks and whoever they have the money, to invest in this. You highlighted the Reem regarding the problem of the liquidity. Yeah, in Europe, it could be a liquidity issue with the banks. In Egypt, for example, we are over liquid, So in reality, how to attract this over liquidity into supporting new models like this, So as I said, and we have to think about what's on ground. We cannot we don't have the luxury actually of taking just something or model that had been implemented and succeeded and go with it now. No, we don't have this luxury. We have to tackle realities on ground. And this is actually, as I said, why we go into completely new model to support the startups, not necessarily equity. Equity will be always there. But how can we do more than this with all these jobs that we're losing, with all those new graduates that we need to create jobs for them? We thought about the bond securitization to enable us, firstly, when we reach to the bankruptcy timing, when we reach to those SMEs that are not able to survive, how can we collect these assets and properly use them or utilize them with a more effective and more working business? So bond securitization could be a tool to that. We thought even of doing, while, for example, in all countries, banks had been supporting through the guarantee schemes the SMEs. Even in Egypt here, we put like a law. The central bank came that they would like banks by end of 2022 to come with 25% of their total portfolio geared towards MSMEs. So we don't, but still the size of this into the GDP and the needs of the SME, where is it? It's still low. How can we maximize that? We created another model building on digital, because digital is the name of the game for the coming period. So we put a digitized or digitalized direct credit guarantee model, where we get the cases examining with the guarantee and give it to the bankers. So even if banks will be reaching like a 25% by 2022, which is like what, 500 billion pounds, we can say 500 billion pounds, approximately what, $250 million or something like that, but any or more, no, we can double that, by the model that we are trying to do. And this is a pure digital model with an interface, with all SMEs digging into the interface and putting information and taking decision, instead of the decision timing actually, or credit decision timing 45 or 60 or whatever days. Now we're targeting like 5 days. The other thing actually that we have to do, or we are doing, through this utilizing this digitalization, because we started the journey. We cannot say we will. As we said, business model need to be changed, and digitalization should be utilized at its maximum. So we started. We cannot wait for that. We started like 2 months ago, and we're targeting, including the 2 months, a year and a half, 36 months, to be the utmost digitalization to enable all these quick decisions, quick access to the finance and to the models. In addition, actually, to it, quick access to information, because what we have within data about the SMEs that we share with our central bank is enabling all of us to come with realistic models to tackle the real needs of our MSMEs. And we hope by that we can kind of close a circle. So when we reach to the real effect of all these actions that have been taken during 2020 and 2021 and should have been taken, so we're ready, to deal with their impact, whether negative, whether a mid-negative, whether a positive negative, whatever it is, we should be ready to deal with it. I think with that, I hope that I did not exceed my time, Reem, and I hope that I gave a synopsis about the role of the guarantee and what we're doing. Thank you.
The change or the need to change the business model of guarantee schemes post-COVID-19. I think they should merit, in fact, a full meeting or a full conference about it, because there are many types of credit guarantee schemes, and I think it would be interesting to have other models also that have dived during the pandemic. You also rightly mentioned the role of equity. Absolutely agree. This is key. The role of bond market, securitization, and of course, we can discuss later on the role of secondary market for SMEs. I think this is also another topic that we could tackle. Anyhow, for the next speaker, Tariq Al-Qadi, maybe you can give us further comments on the role of equity, what has been done for startups really to dive the pandemic period, and what do you see how do you see the exit post-pandemic? Please, Tariq, the floor is yours, and please be short so we can have a few minutes for discussion. And Mohammed is telling me that we need to close at 11:20, so let's consider the time issue. Thank you.
Absolutely. So thank you very much for having me today, Dr. Reem. Thanks for the introduction. Let me talk quickly about the Mediterranean Business Angels. So the Mediterranean Business Angels is a network of networks of angel investors. So our members mainly at the core include other angel networks around the Mediterranean. And the main focus of this network is to create cross-border deals and help investors invest in different geographies in the sectors that they are interested in and in different markets, but also help startups scale in different markets and grow in different markets. So this is the main role of the Mediterranean Business Angels, while also helping people who are leaders and feeders into the angel space, which are the incubators and accelerators, and also later stage investors like VCs that invest post what we're doing. So what we've seen in the past period is initially a hold and a stop on new investments last year, and helping investors trying to help their portfolio companies into sustaining and being able to survive this pandemic. And then later on, things started to evolve. But it's very important for me to highlight that the main difference between small and medium businesses and innovative startups, or startups as we call them, startups, because there's a major difference into the kinds of investments that can happen in both. We're focused on innovative startups. The main difference between these kinds of startups is that they're building business models that rely on innovation. So they most probably are not revenue generating at their early stage. They're trying to disrupt the industry. They're trying to find market opportunities and gaps to solve real problems in the market by utilizing technology. So usually in the first few years, they do not have any revenues coming in. They're building their products, they're getting some traction, they're enhancing their product market fit. While traditional businesses are usually, they have a capital that they're deploying, they're doing a product or a service, and they're getting some revenues. And that's why when the pandemic hit, as earlier mentioned, most of these companies did not have enough cash flow, and that's if their industries got negatively affected by the pandemic, they ran out of cash, and eventually either they had to let go of their employees, and as we all know, all the companies did different things to survive. While startups who were in sectors that were thriving, they were able to generate revenue, they were able to generate actually more investments, so they were able to survive. And the ones who did not have any investments or were in a sector that was not thriving had the complete opposite. So this is very important for us to look at, even at a local micro level in each country. Let's say for the Alexandria Angels, that is part of Egypt, at different angel networks that are part of the Mediterranean Angels, we've seen a significant increase in investment in innovative startups. So if you look at the Q1 report, generally speaking, and on a global level, we've seen an all-time high of 125 billion that has been invested in startups in Q1 of 2021. Now we're waiting, of course, on the report for Q2, but this is a 50% increase in quarter over quarter, and a maybe 94, 95% increase in terms of year over year. So this is a significant increase, which means that investors are still are continuing to invest into sectors that are surging. But it's important to zoom into this report and see the numbers and where are they going and how is that affected. You'll see that the number of deals, and this is across the whole globe, and this has happened since the pandemic has started, the number of deals are less. So if you compare quarter over quarter, year over year, you'll find that investors are being more cautious into investing into new startups. So number of deals have grown less. Sectors have been more specific. We've seen that the sectors that have surged are fintech, health tech, e-commerce, shopping. All these sectors that are already thriving got more investments, and of course other sectors did not. But it's also very important to zoom into the stage of investing, because this looks at startups or innovative startups and not SMEs, but also looks at different stages. So looks at seed investing, looks at early stage, and looks at late. If we focus on the seed or angel, which is the part that we are trying to do, trying to solve in terms of filling this gap of investment, you will find that there's not really a significant increase in that stage, but that's normal in the first quarter of every year because there's a lag of reporting in terms of numbers. It should pick up in Q2. We'll find like in globally there's around $4 billion that were invested in seed stage. It's still an increase, 45%, but it's not as significant as the whole report. But year over year, there's also there has been an increase. The later early stage also startups have got more investments. They got around, I think, $35 billion, which is still an increase that accounts for 60% or 70% year over year. So right now on the Mediterranean Angels, what we are focused on is to help investors identify opportunities for the startups that have a potential to grow in different geographies, help investors and startups fill in the gaps that they need. Whether we're focused mainly on equity, and why equity? Because most of these early stage, or let's say seed stage startups, are not revenue generating. So different types of investments are not or funding are not valid in that case. But in some startups like the e-commerce and shopping, there's the space over here where we can find alternative to equity financing. And right now, we with the events that are coming up and things starting to open up, we are starting to have more, let's say, intersections on the opportunities that are open between between different countries. I don't want to take too much time, and I'll leave room for our next speakers and the discussion. So back to you, Dr. Reem.
Thank you very much, Tarek. I was trying to to interfere in the discussion because we are really very much short of time. Thank you very much for your insights on this. I think, of course, just one question for clarification. You're mentioning the growth, the increase of investment in Egypt, in the specific case of Egypt, correct?
The numbers I mentioned are the global ones, not in Egypt.
Okay. And then specifically for Egypt, how do you see the situation?
It falls down the same paths. We have, in 2020, we had around $190 million invested in startups. The sectors more or less are the same: health tech, fintech, and fintech, health tech, and e-commerce were the top three industries that got the investments. Egypt ranked number 2 in terms of number of deals and in terms of the amount of funding in the Middle East, but also number 2 in Africa. So looking at Africa and Middle East, it's more or less the same. But in terms of numbers and amount of funding, of course, it's a much smaller fraction than what's happening globally.
Very good, thank you. And also let me remind that Egypt is one of the countries that grew in 2020, positively, I mean. So I would like to give the floor to Mr. Tarek Tawfiq, who is the Vice President of Business Mail. Please, Mr. Tarek, the floor is yours. So you.
Dr. Reem, thank you. I'm just going to jump straight to the issue. I believe that without having a clear vision or a picture or a snapshot of the state of economies and the state of SMEs in our region, it's very difficult to come up with practical solutions. So let me share with you some statistics, that I believe that from Egypt, that I believe are more or less, similar in the whole regions. 50% of our economy is informal. 3.7 million establishments are SMEs. They comprise more than 95% of establishments in Egypt. 78% of labor is informal in Egypt. 40% of labor is working with formal sector, the rest are informal. Only 10% of property in Egypt is registered. So, that capital of 90% cannot be collateralized. So, these are facts, that we have to contend with. Let alone, some of the major issues that have been impeding the inclusion has been red tape, land allocation, licensing, permits, tax collection, and these have been the driving forces of keeping SMEs out of the formal economy. Without addressing these issues, the inclusion will be moving at a slower pace than anticipated, despite, the electronic revolution that we are witnessing. We also, surveyed, SMEs to see their view of finance. 36% of them said they don't need finance. 25% they think it's burdensome, the process. 25%, are afraid of the legal liabilities. Even with banks, 10% of banks don't work with SMEs. 36% of which, believe that they have a good established mechanism with SMEs, and 45% are average, more or less, So, having said that, we have to address these core issues. But I would like to say, also share with you some of the initiatives that took place, in Egypt in the COVID arena in order to address a lot of these issues. There has been an allocation of £100 billion with 5% interest rate allocated for SMEs. there was informal compensation for informal workers. More than 500,000 informal workers were compensated in cash. Delay of loan payment for 6 months, delay of tax payment, conditional cash handouts were given to, was there the program, but it has expanded over the last year to include more than 3 million families, 90% of which are women. And again, there has been a program that has been agreed with the Federation of Industries on job retention, by which, we share the cost of redundancy in our labor. The one other remarkable thing that I have to say, that has been a very strong drive in legalizing property. So, 2.5 million registered property owners that are not registered are, have been booked with the government to legalize their properties, including businesses. This will ultimately lead to a collateral tool, a tool that can be used as a collateral for finance, notably for SMEs. Again, there is a dramatic move into rehabilitation of shanty towns, removing them and moving them to formal housing and formal industrial entities. And I believe this has been moving on a fast track, and this has been also one of the core issues of exclusion, even when it comes to labor and even when it comes to formality at large. So, in this respect, having said that, we can start talking about a legislative framework, that would help accelerate. I would have to say that in Egypt, microfinance has been more or less developed, over the last few years. There is access to millions of even nano finance, with even a default rate of 1%, most of which are women. And we see that done, and now it is being legalized, and there is an inclusion from the central bank to give licensing for fintech companies, to bank licensing for fintech companies. And even the ECB gave non-banking companies the license to operate digital wallets, which will allow them to access millions of individuals through the digital trade. Again, with the Financial Regulatory Authority in September, hopefully, in the coming session of the Parliament, will have a non-banking fintech nano-finance, and this will also help give access to millions of workers in this respect, So, I believe that without addressing the core issues and the infrastructure and the state of the economy, would be very difficult to have this kind of acceleration. And my question over here, what other tools can be done in this respect, to accelerate the financial inclusion and to help, bring the SMEs into line. One last issue that is also of paramount importance, is that the government over here ratified a law for SMEs, MSMEs, and we have an agency, the MSMEDA, that primarily it deals with SMEs when it comes to giving ease of finance, instant legalization of the businesses with no backtracking of any taxes, no liabilities. And I think this will also be a great step forward, to help accelerate the financial inclusion. Let alone, one of the issues of concern is that it's not only the existing SMEs or the informality that is coming every year and joining the informal market. So I believe that these mechanisms or these legislations and tools, can help circumvent, the expansion of informality in the near future. Thank you. I think I'm done with my time. Thank you.
Thank you very much, Tarek. You really were on time with very important issues. You mentioned the issue of informality. I think this is the key. I have one short question to you. How do you see a tax policy, so giving further incentives specifically to help the informal sector to formalize? So do you see that the tax policy could play a role on that, or to move the informal businesses between parentheses to the formal economy?
Definitely, this is one of the most intimidating points, with SMEs. But, I mean, the direction of having a minimum flat tax, for SMEs under a certain threshold of turnover is actually in discussion. And once implemented, I believe this can be a major accelerator. But it's not only the tax part, like I mentioned, issue is that getting permits, licensing, land legalization, these have been also some of the major issues that has been pushing SMEs into informality. So, I mean, the four of them go along together with the same level of importance.
Thank you very much. So I have a question to all the panelists, and this is also raised by Tarek at the end. What other tools that could be developed and mainstreamed to facilitate access to finance to SMEs? And I would like you to think about the role of grants, particularly not only the grants from governments, from national governments, but also grants that come, for example, from international organizations. Because if we take the case, for example, of Egypt, some of the grants are also taxed up to, if I'm not wrong, up to 40%, if I'm not wrong, but you can correct me. Please, I would start with Nagla.
Yes, with regard to the grants, I'm not sure, but I don't think, when it comes into the form of endowment or other, they are exempted from taxes, trust funds or endowments or direct grants. I'm not sure about kind of soft loans. Maybe the area of the soft loans, are subject to taxes, but definitely grants, endowments, trust funds are exempted from taxes. Yeah, but I'm not sure about the soft loan, but definitely those are I'm sure of that, yes. Back to how, I think actually, because as we mentioned, think out of the box and come with all these models that we talked about, but I think we can add to that also the involvement of the big private sector or corporates, for example, because if we talk about a complete chain where you have like a big corporate or a private sector, big industry, or dominance of the big industry, I think through the value chain, they can kind of support the other SMEs over there. And I have to tell you that we are examining that now, and we're coming with a complete product, a guarantee product for the complete supply or value chain to cover different guarantees at different clusters, from the beginning until maybe local market or export. And I think actually those can play. We've already started something with one of the giant business, it is Coca-Cola or something, that are doing actually all these business across the small. We started that cashless and the guarantee and the line from banks and the other. So I think actually the role, we can emphasize this role, and we can support them maybe by kind of lower interest finance to them, so you start from top down and down.
Thank you, Nagla. Tarek Al-Qadi, please, what do you propose?
So, we're looking at it from maybe a slightly different angle, because mainly angel investing is most of the investors are putting, money out of their own pocket. So what we really think is very beneficial is to have tax incentives for the investors themselves, to have more incentives to get more investors to invest in that, in that stage, because these early stage startups, or let's say seed stage startups, cannot get any loans. They don't have any financial documents that allow them to get loans from banks or different kinds of investments. So it needs the other way around. And we've seen incentives like that in the US and Europe for angel investors. And I think this is very important to address and see how we can also maybe have some guarantees for those investors and guaranteeing those angel investing, this asset class for those kinds of investors.
Yeah, you have Nagla here, so you can discuss.
Well, we have a model, actually. we did a model, actually, basically securing the invested money. It is not actually securing the outcome, but the invested money. And we can talk about that for sure. I will try to connect to you.
We need to catch up, absolutely. Yeah.
Of course, yes.
But also, Nagla, you mentioned the role of equity and the changing business models of guarantees. And I think this is a way to enlarge your your engagement beyond that, and also going back to Mr. Tawfiq, he mentioned clearly that we need to move onto the overall economic structural issues to really accelerate the SMEs, and this is key, and it has to be linked to national policies of accelerations of development of SMEs. Now, my last, I was granted a couple of minutes by Mohammed, so I will try to finish soon. I mean, one of the pillars of resilience that you all mentioned is digitalization. But at the same time, of course, there are pockets of the, of the private sector which is still informal, and how to formalize them. This must be a national policy debate that needs to be accelerated. So digitalization, we've seen it has served very much as a buffer in the pandemic. That's clear. Now, I want to tackle the issue of sustainability, means the ESG factors, mainly environment, sustainability and governance. So how do you factor this into the SMEs functioning business models, particularly in the post-COVID? I will start with Mr. Tarek Tawfiq.
Well, let me go back to one issue, because, you know, the infrastructure needs to be addressed, you know, and the governmental policies. So, I mean, if we look at, you know, the supply chain management and logistics, you know, investing in it, you know, by having logistical hubs, you know, by having roads, infrastructure will help facilitate the ease of doing business, you know, because at the end of the day, informalities are centered and population centered where this infrastructure does not exist, you know. Having an industrial policy by which, you know, you push or promote circular economies or circular industries, you know, and having clusters by which you will be able to bring in SMEs and the feeding industries and the supply chain and the value chain integration. Without this kind of ecosystem, you know, again, it will be sporadic. But again, you know, when we talk about digitization, you know, of course, there are fast-track solutions that will go along with that, like having digital marketplaces, you know, like the Alibaba kind of solution. You know, it's like having the physical infrastructure along with the digital infrastructure. I believe this will help accelerate the whole process in a remarkable way.
Thank you very much. Back to Nagla. What do you think about the ESG within your guarantee product?
In reality, and linking that to the digitalization issue, and as I mentioned, you know, we started already our digitalization journey. I think actually across this journey that we're pushing hard to finish early, and we have the central bank behind us pushing more hard, you know, I think we can reach to the point that we can, for example, create this SME digital platform where the SMEs can go into the platform with our guarantee, you know, and where all either investors or banks or whoever can come in there, and we facilitate this kind of connection through our guarantee to them. And I think we are already thinking about, you know, this product to come out sometime soon, you know, once we start the digital issuance, and we kind of take the curve of learning with our SMEs in the market, we reach to this area of the platform. Equity can step in, banks can step in, and it could be auction even, you know, we can reach to this competition about the cost of finance, where we can lower it for certain clusters, you know. So we have that in mind to utilize the digitalization at that level.
Thank you very much, Nagla. Tarek?
So I would have to, you know, concur on what has been said. You know, digital transformation or digitalization now, the past year and a half have been obligatory for all businesses and all organizations. And looking at platforms that can bring together different funding opportunities and investment vehicles with guarantees, and, you know, the infrastructure is really important. And now that we have been trapped in our own countries and our own cities, we realize that even though we are, you know, trapped physically, but with the digitalization, we can still get access to support these investments throughout different platforms. And we need to work on that to double down so that we can continue this in a sustainable manner.
Thank you very much for three of you. Thank you very much, Tawfiq and Tariq Al-Khadi, for this very good discussion. And I hand over to my friend Mohammed. Please, back to you.
Now I think you can all hear me. Thank you very much, Professor Ayadi, and all the distinguished speakers of this first appetizing panel, I must say. And now it's time for a very short break, during which we will show you a video. And after that video, we will be back right away for the second panel. So stay with us for the video. Excellent. So welcome again for this second panel for today, this time dedicated to the use of technology in MSME finance. The moderator for this session, I'm happy to invite him again to the floor, is Mr. Thomas De Luca, the SME Finance Forum Ambassador. So Mr. De Luca will be introducing the panel and the prominent speakers in this second panel for the day. Mr. De Luca, the floor is yours.
Thank you. Thank you. Very pleased to be back. So panel 2, Build Back Better Using Technology. We've heard quite a bit about technology already this morning. The focus of this panel is to highlight some cutting edge technologies and some innovative business models that have already pushed the frontier of MSME finance in the Mediterranean region. The way this works, I'm going to introduce the panelists quickly. We're going to put up a polling question. I'm going to then turn it to each of the panelists to do a brief introduction of themselves and the companies that they represent or the entities that they represent. When they'll finish that initial introductory session, we will then review the results of this panel question and then dive into what I hope to be a fun and stimulating conversation and Q&A. So with that, I'll do a quick introduction. We have Mr. Christophe Mahabé, head of Med MSMEs program. We have Mr. Guy Drossert, Managing Director of Fidor Solutions, and we have Mr. Richard Wilson of Strands. So if the host would put up the polling question, and I'd ask everyone to take a moment to do the question. And in essence, really what I want to get at is we've talked a lot about innovation, we've talked about regulatory reforms, we've talked about things that are important for the improvement of MSME finance in the Mediterranean region. But time and resources are limited. So of the 4 that we posted here, if you get to bet only on one, what do you feel is the most important? I won't read the questions out. You could see them quicker than I can read them. But please make a point to enter and contribute to the poll. Thank you. I think we'll give that about another 30 seconds. And then I would like to call up in a virtual sense, of course, the first panelist, Mr. Christophe Maheb.
Thank you very much, Thomas. Thank you for the UfM for inviting us to share our experience and our activities that are meant at promoting financial inclusion in the region. So the Med MSME program is a EU regional program that is funded through DGNIR, and that covers the 8 partner countries of the South neighborhood. It supports actually the development of better business environment for MSMEs by focusing on 2 key topics. One being SME internationalization, the second one being access to finance, which is the topic of the day. We are actually serving the implementation of the UfM work program for the regional platform of industrial cooperation. And therefore, we are very keen on participating to this conference. The program actually intervenes at the level of the policy formulation and regulatory reform. It also supports peer-to-peer dialogue and north-south and south-south exchange of practices among professionals, among practitioners, among policymakers. As a baseline, and it was said already, but I mean, a interesting survey that was very extensive on 56,000 enterprises shows that access to finance and undertaken by EPSOMED being another regional program funded by the EU, brought out that 91% of SMEs still consider that access to finance is the key impediment to growth and investment, despite the extraordinary support provided during the pandemic. But the survey also shows that 96% of South Med enterprises place great hopes into digital financial services and financial products. And this is where technology is called for rescue. And this is the topic of this panel. And I would also quote, as mentioned by Dr. Hanig and Thomas De Luca previously, policy and regulatory reforms are needed to ensure that the region catches up with the technological evolution that places innovation at the heart of competitiveness, and not really competitiveness through access to finance. In 2021, actually, we analyzed the COVID response, and we identified 35 COVID responses that bring two interesting conclusions. First, the crisis resulted in a more inclusive dialogue at national level, simply because in front of an unprecedented crisis, the contribution of all was requested. So more inclusive dialogue. The second is that the trial and error methodology in policy making was considered acceptable, while actually usually regulations are carved in stones. Worldwide, including Europe, of course, policymakers considered that yes, you can try a regulation, see if it works, and amend it in a very flexible way. These are two very important patterns that came out as a response to the COVID crisis, and that should be, in our view, sustained. More inclusiveness of dialogue and more flexibility in carving policies and regulation. So in terms of activities, we organized 12 working groups at national level and several regional working groups to better understand what would be the response that our program could contribute. And those topics that, in our view, would gain to be addressed from a regional perspective, regional lens, are mainly four in the field of access to finance. The first one is the promotion of the regulatory sandbox as a tool to carve regulations in a flexible way, and that flexible enough to cope with the pace of development of the technology. And Jordan, Tunisia, and Egypt are showing the way in that respect, Jordan being the first country to launch the regulatory sandbox in the region, and we will support the exchange of experience and dissemination of these tools, because we believe that if we want to include more technology in the field of in financial sector to better address the SME needs, we need to have this flexibility that is provided by the regulatory sandbox framework. The second one is how to prevent fintech to replicate the pattern of the past, whereby women have less access to finance, the gender bias. And this is interesting because fintech is usually considered as a gender-neutral solution that would, to the contrary, be very inclusive, and all studies undertaken in Europe and in the States are showing the contrary. Because first, artificial intelligence is replicating the past, and second, because women participation in the development of the algorithms algorithms that will decide upon the provision of financing, the woman participation is not enough. And we are working closely with the fintech ladies in fintech association in Europe, and to bring some of their expertise to the south. The third initiative is how can we step up the interventions of the microfinance sector to bear more impact on the underserved segments, including entrepreneurs, women, and the famous missing middle. And this can be greatly facilitated by the adoption of technology that could result in cost cutting and the reduction of end user costs by using the new tools, cloud-based tools that would reduce the cost of administration of the portfolios and payments. And this assignment was launched actually 2 days ago at regional level and will be undertaken in coordination with the European Microfinance Network. The fourth and last initiative is promoting fintech and open banking in the South Med countries. And this is a key element to ensure that the South Med countries will really capitalize on their talents in the field of IT and finance. So for that, they need to have big data available, indigenous big data, not big data from Europe, nor from the States, nor from China, but big data from their own country. And this big data can be created if banks and other financial institutions share their internal data with the ecosystem. And this is what has been imposed to the banks in Europe through the Payment Service Directive number 2, that is creating huge amount of big data. And based on this big data, you can have fintech companies flourishing, startups, entrepreneurs providing new innovative solutions based on this amount of big data and artificial intelligence. So on these 4 subjects: regulatory sandbox that provides flexibility, preventing a gender bias in fintech, third, stepping up the intervention of microfinance institutions towards more impact, and last is promoting open banking and new innovative solution through the promotion of the Payment Directive number 2 of the European Union that was fully enforced on January 1st this year. So it's very recent. We believe that we are contributing our share to hopefully to the improvement and let's say to foster the adoption of technologies by the financial sector and also by SMEs to capture opportunities coming in the next future. Thank you.
Thank you, Christophe. That was a very broad, very comprehensive set of initiatives, which will really frame the rest of our discussion and indeed the rest of the conference. So I look forward to delving into some Q&A on that. Prior to that, though, let me invite up Mr. Guy Drossert, Managing Director of Fidor Solutions. Guy.
Hi, Thomas. Thank you very much. Thank you, Christophe, for your direction setting. Quick introduction. Fidor Solutions is obviously a company that belonged to Fidor Bank. That was one of the first digital banks that was launched in 2010, I think. The word digital was not there. The smartphone was not there. There was, I think the BlackBerry was just coming up. And it was an interesting time to start a digital bank in the midst of a financial crisis, of course. But we did it. We managed. We broke even, and we actually created more opportunities out of that. And one of that is that we built our own technology stack because at that time we couldn't find what we need in the market. Today it's obviously more diverse. We created a company called Fidor Solutions, in which we started helping others building digital propositions. And the company is actually very much focused on emerging markets. We have digital banks in Algeria, Middle East. We are now in Sub-Sahara Africa, busy Asia. And with that, actually, it's like a cook that goes and explore other regions and sees other needs. And we create constantly new, unique selling points in our technology that we can bring to our, let's say, customers that use our technology and be a winner. Obviously, we have, with our own bank, we experimented it ourselves, and we brought also a lot of these ideas back to our own bank. And one of the things we did, we focused very early in our lives on SMEs in Germany. And there are still many parallels on the same problematic situations SMEs in Germany have, where you would say it would be better sorted over there. It is actually not that much different, and that offering is growing. But more on that later in the discussion. What we believe is that emerging markets will be the right area that will inspire us, will create needs for us for innovation, because we want to keep on innovating. And we are, let's say, trying to look at all the trends in the market. We did that as Fidor Solutions. Recently, we are acquired by Sopra Banking, which adds 45,000 people to the game. And it is good because there is so much, there's so many opportunities it can bring to your business. It's good to have a bit more firepower. Things we are focusing on in the SMEs is the KYC process to make that easier, the lending process to make also the credit checks easier, but also more qualitative by playing the data game. And last but not least, we are also looking at supporting solutions like marketplaces, where a bank or a financial institution can sell more than their own products and get some commission on it. Because ultimately, everybody wants to be in the daily life of an SME or for an individual as much as possible, and take part of that, because that's where we are the strongest. So I think that's a short introduction, who we are, where we came from, very fintechy, and looking forward to what you guys have all to ask us. We can bring a lot.
Very good, G. Thank you very much for that very informative introduction. Our next speaker, if we can call him up, Mr. Richard Wilson of Strands.
Thanks, Thomas. Great to be here today. So I'm Richard Wilson, a consultant from Strands. So what we're doing at Strands is empowering banks and fintechs to serve their customers in a more efficient manner. How we're doing this is we are using the transactional data, and in some cases, some third-party data, if that's open banking or some maybe accounting data or invoicing data, to provide the bank's end users and SMEs with financial management features. So these can include cash flow management, financial calendars, spending analysis, invoice management, budgeting tools, provisioning, etc. And what they're doing is, we're using this data and these features to also provide insights and which are personalized to the customer, dependent on their behavior, depending on their spending patterns, and trying to predict some outcomes and assist them in their day-to-day life. So what we are doing is, providing the simple and easy to understand information to the SMEs, the end user, through a bank, using our white label solutions or APIs to present this to their customers, and assist them on, this digital journey to, to be financially stronger, to understand the business's seasonality, and assist them before they run into some issues that might arise. So this could be around liquidity issues, and then providing an action such as, a loan, an overdraft, some support, and other items, if there is maybe a good cash flow, understanding the seasonality, the growth of the business, and maybe provisioning some money away. So there's a lot of different use cases and strong, financial management tools that we can provide banks that assist their customers and increase that engagement with their customers in the long run. Thanks.
Excellent. Thank you very much, Richard. So according to the order of the event, my understanding is that we should be putting up now the results of the poll. And again, thinking this through, if you have one shot to fire, what is the single most important thing that we should be focused upon in terms of recovery of the SME sector? And what I see, interesting, so 30% think it's about digitization, which helps to the automation and such. I think that's an important number. Kind of surprising on 19% on the regional programs. I think I would have anticipated a little bit higher on that. I think it's somewhat telling that only 4% are focused on recovery. That's not much of a fun thing. Bankruptcy, insolvency reform. Certainly in my intervention early on, I tried to make the point that it's really the flip side of the coin, in my opinion. But maybe we could open up the floor for a bit more debate on that and why it is getting so little attention. And then ultimately, point D, greater financial aid to stimulate new MSMEs emerging from the pandemic. 48%. Excellent. All right. So I would like to now ask my panelists to comment upon that. Are they surprised about the results? And ultimately, which one of the four would they have chosen? And indeed, why? And before I turn the microphone off, I would just like to draw my co-panelists' attention to the clock on the bottom right-hand side, recognizing that we've only got I think about 22 minutes left, and I'd love to do a couple of rounds of questions. So if we can keep our answers fairly short to the point and mindful of the time, let's go in reverse order. Let's pick Richard. Richard, looking at the results, are you surprised? What do you think it should have been?
No, so I think it definitely matches, what we've seen in the market. The digitalization and providing that support and that aid to customers during this pandemic. So it's not too surprising for me. It's definitely what we've seen in the market throughout the pandemic, and the sort of the drive for banks and to be more digitalized and to provide support to their customers and to do that in an efficient manner. So that's definitely aligned with what we see in the market.
Okay, excellent. G, what about you?
Well, on the first one, technology, obviously it's becoming much more an enabler. It's just a necessary evil to do business, and that's why everybody finds it very important, and it hangs together with the largest outcome, because what I like is the optimism. Everybody uses the COVID now to look at new business opportunities, new ventures, and I think that optimism can be stimulated. But it's great that there's something, let's say, not so pleasant from something pleasant.
Okay, thank you, Christoph. What about you? I think I was expecting more direction towards open.
So about the 19% mentioned. So I would say we have reached 100% of the objective, because if we consider a country, of course, 80% of the concerns of the country are national, and 20% might come from its interaction with the region. Yes, but it also places the emphasis on the fact that we need to come with like appropriate response where nations can really take benefit from the regional exchange of practices, keeping in mind that policy reform and regulatory reform is very often conditioning the channeling of international cooperation funds towards countries. So if we say that 48% say that yes, funding is the most important, from our perspective in international chain, this is conditioned by policy reform and regulatory reform. So it's linked.
Excellent. Okay, and indeed it is. It would be great to have had a sub question on, okay, 48% think it's about funding to help small businesses. We could spend days debating the best way to use the taxpayer's dollar. What's the best way to invest that money, and how do we go about doing it? Is it helping SMEs upgrade their technology to utilize cash flow solutions such as that offered by Strands? But I'm afraid that one is not on our remit, or perhaps the rest of the panel in the afternoon can pick that up. So let me just jump in on some particular questions. I'm particularly interested. Obviously, FIDOR has been around a long time, much of the fintech period of time, or at least the period while I've been in fintech. It was one of the original European challenger banks, very innovative. I mean, really pushing the cutting edge following the last financial crisis, as I recall it. What I'd like to know then, G, is you started out as a bank, a challenger bank, a digital bank. I'm not sure there's much of a difference, but I think challenger is more fun because it's a new bank opening up and pushing the markets. Now you monetize the tech by offering banking solutions, presumably to challengers and incumbents alike. So it's an interesting perspective there. But thinking about innovation, thinking about competition, work that your company has done in other emerging markets in the southern Mediterranean region, do you think there's a role for challenger banks, and how would they be received? How would they be welcomed?
I will unmute. Yeah, we launched a challenger bank called Banksy in Algeria. And yes, you're right. We are very long in the scene. I was once on stage and they called me the oldest fintech of the world. So I don't know if that's a compliment. But no, we launched Banksy as a mobile bank in Algeria, a country that has its own specifics, of course. And the great thing is that we had, for example, in the middle of the Sahara, customers onboarding through their mobile phone to open a bank account. And obviously, the bank originally only had branches in the coastal cities. So it's the largest country of Africa, and suddenly you have a full country reach. And it had 600,000 downloads in about 3 months. I think that says something, yeah? That is there a need for a digital bank? Well, if people are downloading it with TV crews coming that we never invited, and that was great. We did it together with the local bank in Algeria, and we are replicating this. But Banksy is is 100% digital, actually 100% mobile, and it will be, let's say, having a lot of things in it. The only thing that was not in it that we have launched successfully in other regions and that made Peter Bank big was a digital community. We have a digital community in which we actually use as a customer acquisition platform. and that community base is very helpful, and I think that part we could even launch in other countries very easily.
Excellent. Is Algeria a market in which cloud banking is permissible, or is this an on-prem?
No. It's an on-premise, and I think it's the right point. We hit that more often. It doesn't really matter from a technology perspective for us. You just get the updates shipped every quarter. But in general, some countries are not so cloud ready yet, or are cloud ready but don't want the data to leave their country. That is the other step. So yes, it's a local solution in the country, but working as well as others. Yeah.
Is there any particular regulatory reform that would help your business, or flipping it around, that would help your potential customers, that is to say, domestic incumbent or challenger banks in the Mediterranean? Is there any one regulatory reform that would improve their access to services such as yours?
I think the big challenge for countries Algeria is obviously their currency. And it has nothing to do with a digital bank, but it is very difficult to trade in their currency, and it goes via all kind of hoops. And it makes for people in Algeria it more difficult to acquire goods from outside Algeria, and that is where a government could help, but also a visa scheme already helps. So we are trying to enable as much as we can, but we need to keep that in mind. Yes.
Okay. Actually, that's an excellent question. An excellent point. Thank you, G. Because to the extent of my intervention a little bit, I was trying to refer to regulations with best of intentions that have unintended consequences on particular aspects, such as bringing technologies into markets. As a fintech entrepreneur, I've sold to many emerging markets. And one of the impediments might be currency controls, or just the ability to contract with international technology providers. So thank you for that. For the regulators out there, there's an unintended consequence and a way that you could get back to the office and potentially put that to work. Fintech visa schemes or something of that nature. All right, well, let's shift gears a little bit. Let's go over to Christoph, and let's talk about open banking and PSD2. Obviously, it launched here in Europe in March, came into full force in effect, and we're starting to really see the benefits of it, particularly in the consumer banking side, also wealth management, money management, and cash flow maturity, I suppose, on the consumer side. But it also has some significant benefits in the micro, small, and medium-sized categories. How do you see that playing out in the southern Mediterranean? And I mean by that, in some respects, obviously the EU is 24, 34 countries lumped together. The power of big data is obviously directly connected to how much information you have to crunch. How do you see it playing out then in the individual countries in the southern Mediterranean?
Thank you for your question. We really believe that we are facing a tsunami in the financial world, and that will hit the banking sector deeply and widely. And nobody can risk from this tsunami because it's on the cloud. So it will be controlled by one, and you can really not pretend that you're protecting yourself from this tsunami. So now the question is how to cope with this transformation, and how fast will this transform? We had several discussions with central bankers in the south, and some were telling us we are not culturally ready to have our banks sharing their data with their competitors. And we were replying with our colleagues from Europe that the banks in Europe were not culturally ready either. Nobody would like to share its internal data with third parties. But it's a fact and a matter that if it's not done through banks, it will be done through GAFSA in general. who are going now increasingly financial sector. They are issuing bitcoins. So they are big provide to generate a rupture, really breakthrough solutions, unprecedented, and the banking sector has really to take that very seriously. It has to be taken from a policy perspective. We believe that the EU, and this is also acknowledged by the US, in other parts, took their decisive steps toward this new financial by adopting and imposing and enforcing the PSD2. So we really believe that awareness raising at the South Med region level is critical. Each country is, of course, suffering of going its own way and route, but there is a need for dialogue. There is a need for bringing expertise, as G and Richard and yourself are doing, also to bring professionals. It has a cost. It takes effort. It takes time, and this is what we want to support. This is our duty to do that as a program.
Excellent, thank you. All right, I see we've got 11 minutes. It's probably time for me to address a question to Richard, and then we'd probably do a final round for everyone to participate. So Richard, I want to come back on Strands, and to my understanding that the product is cash flow management, measurement, an informative tool to the small business owner, and obviously to the bank behind it, allowing the business owner to look at cash flow and manage it and measure it in a different way, or a more automated way, or certainly a more insightful way. That highlights to me a comment that was made by one of the morning speakers about the need for education of micro, small, and medium-sized business owners. Not necessarily women-oriented business, but certainly an element there. Any of the categories of small business owners or micro business owners who could benefit from greater understanding of financial tools, financial management, things that I think in the Western world we sort of take for granted as just part of the education that we receive. Can you speak a bit about Strands operations, and particularly in emerging markets, and how your tools are in fact being used from an educational standpoint to the overall benefit of the micro, small, and medium-sized enterprises?
Yeah, sure. So thanks for the question. I think, with regards to firstly, the financial education, we've got this library of insights and some templates that are broken into certain categories. These are, alerts and warnings, as I mentioned before, looking forward to any sort of anticipating any issues. But then we've got a category of, financial education. So we're looking at, identifying certain patterns or behavior, and then providing that education around better spending habits, or tools to enable those businesses to be financially stronger, or to have a product that might actually suit them better. And then we've also, with the financial management tools, the cash flow, the calendars, the analysis, providing very easy to understand, other graphs or, trends or bar charts, to really have that understanding of what's happening, on a day-to-day basis. There's a number of, techniques where we are showing recurring, patterns that we're detecting and these scheduled transactions. So the customer really understands what we're predicting. This might be presented differently to a committed transaction, so they know what's a prediction versus committed. So it's really trying to make it, really intuitive, simple, and easy to empower those business users that maybe aren't that financially savvy, to have those tools that understand where the business is. They can concentrate, on what's important, and that's the business, and bringing in extra income, or controlling that cash flow, and have a strong ability to trust their bank, and for the bank to provide more personalized interactions with their customers.
Excellent. Thank you. That's very helpful. All right. Well, look, we have looks like 7 minutes left. We're bringing it to the home stretch here, so probably one more round of comments. But I'll ask it in a manner that allows us to have concluding remarks. And I'm struck as I was preparing for this presentation. I was really reminded of 2010, 2011, the back of the last truly financial crisis, and what it felt like to be a fintech entrepreneur when you felt like, the shoots of spring coming up. You felt optimism, you felt things were really going to change, and all the headlines and all the buzz and everything was, this time we're going to get it right. We're going to change. We're going to implement new rules. We're going to digitize. We're going to improve SMEs. And indeed, looking back over the last 10 years, the world has come a long way. And in fact, the fact that we're having a conference such as this, focused on micro, small, medium-sized enterprises. In fact, just looking at the sheer scope and scale and indeed speed of governmental support for the small business sector, going back to last May, April, March, when COVID first came in. So clearly we've come a long way in the last decade. And yet, on the other hand, I'm struck too by some, what I look back on as obvious changes that could have been made and yet haven't been. Adoption of electronic signatures, cloud banking, digitization of documents. Well, we can go down, on the road on those topics. So my question to you three gentlemen as we close is, looking forward another 10 years, and let us hope that we don't have a crisis 10 years from now, but from the basis of 10 years, just the same, what do you anticipate are things that will almost certainly have happened between now and then? We've identified some really good initiatives already today. And where do you think we will perhaps still be lacking 10 years from now? Go for it, G.
Yeah, so what I really find now the most interesting thing is the success of Starlink. If that's running well, and there are other competitors coming, what does the telco, where does the country stop? Now we cannot block Wi-Fi anymore with the great Chinese firewall. I don't know, but I do believe we go global big time, and I think Starlink it will be a new enabler for many new services. Imagine on boats and whatsoever what you all can do. So I think the next 10 years will be another technology run.
Excellent. Okay. Well, you do raise the hints of some nationalism that with clouds over the horizon and how that might impact some of these as well.
I live in the UAE and they block calling over WhatsApp. So if I link up with Starlink, they can't. So
fair enough. Open information remains the key to freedom. I understand that. Very good. Richard, why don't I go to you, and then I'll let Christoph bring us home.
Yeah, I mean, I still think the sort of digitalization will accelerate, and there'll be more focus around that. I think more and more we will start incorporating other third-party data sources. So we're already using open banking, and I think that's around the world will increase. But looking, invoicing data, carbon footprint data, understanding really, having a full spectrum and using that to get a really clear picture of, finances and banking and be mobile first. I think that's really the trends that we're seeing, is leveraging that big data and, you making it work, and not just, having this data and not utilizing it properly. So really leveraging third-party data and bringing it all together in one sort of ecosystem.
All right, very good. All right, Christoph, why don't you start us off? Why don't you bring us home with the final concluding remarks? What does the next decade look like?
It's a tough question. Thank you, Tom. It's a tough question, as we were told this morning. Okay, we are waiting for the next crisis. So within the next 10 years, whether it will be sanitary or financial, we have to prepare ourselves for that. And this was clearly mentioned this morning in the previous panel. But a fact is that we are facing transformation of the financial sector. PricewaterhouseCoopers is foreseeing the closing of 40,000 branches within the next 3 years in Europe. 4,000. This is about 500,000 bankers that we have to find new jobs or convert to the digital transformation products. So we are facing something that is absolutely deep and wide. The regional integration is something that can help to cope with transformation. And I think that this is one of the strengths of Europe, is that you have a big market because you have freedom of capital movements. notably, you know, and these big markets give you critical mass to be somebody in the financial sector. So as a conclusion, I would say that these regional platforms, like the EU South Neighborhood, DG NEAR, are extremely important to foster this regional integration, to allow a person like G and Richard working, for example, in Algeria, to be able also to work in Algeria, Tunisia, Morocco, to get a better critical mass. So we are very proud of our 19% that were mentioned previously in the poll that you made. Thank you.
Excellent, excellent. Well, gentlemen, thank you so much. It occurs to me that we should congratulate ourselves. We made it through an entire panel discussion on technology, and I don't think we mentioned blockchain or Bitcoin or digital ledger technology once. That's not to say that won't have a dramatic impact on the next decade, but I think that the mere mention of such a word would pull us into an entire new panel, and we haven't been afforded the time for that. So I'd really like to thank everyone for the great contributions. I certainly wish we had more time to keep going on it. But with that, I'd like to thank you again. I'd like to thank the audience for their participation in the polling question. And with that, I will turn it back to the moderator. Thank you.
Excellent and very punctual moderation and intervention from all the speakers. Great interventions, actually. Thank you so very much. And it is now time to show some more videos, very short ones, after which we will move directly to panel 3. So I invite you to stay around and hopefully enjoy these short videos that we will show now. All right, so welcome back. And it is now time for the third and the last panel actually for today, dedicated to sustainable finance. Mr. Klaus Prohaska, I hope I'm pronouncing it correctly. If not, please feel free to correct me. Mr. Prohaska, head of section for financial systems development and insurance at GIZ, will be the moderator for this session. He will introduce it and he will introduce the prominent speakers. Mr. Prohaska, the floor is yours.
Yes, hello and welcome to our session on sustainable finance and SMEs. My name is Klaus Prohaska and I head financial sector development at GIZ headquarters. The topic of sustainable finance really has moved into the spotlight recently. Only last week, and the G7 confirmed their climate finance commitments in Carbis Bay and invited additional donors to join. The G20 created a working group on sustainable finance, now that the US is back at the table. The NGFS, a network of central banks working on greening the financial systems, has gone from 8 to 92 members in only a few years. And the EU has emerged as a leader by launching the Green Deal, coming forward with an action plan for financing sustainable growth, founding the International Platform for Sustainable Finance, and advancing work on the green taxonomy. But also Germany issued its first green sovereign bond and enacted a national sustainable finance strategy. So sustainable finance is a hot topic, not least due to the fact that time is running out. So far, the vast majority of the work on sustainable finance, however, has been focusing on capital markets and big project finance. Sustainable finance for SMEs so far hasn't gotten yet too much attention. To date, the SME financing agenda and the sustainable finance agendas have operated largely in parallel without too much interaction. And so accordingly, there are two possible ways to approach the topic of greening SME finance. One is the sustainable finance angle motivated by sustainability concerns, at the moment mostly climate mitigation. There, so far, SMEs haven't been a primary concern, maybe rightly so. After all, the really big carbon emitters are big corporates in developed countries. And then there is the SME finance angle, motivated obviously by economic inclusion and economic growth. Here, green credit is being done here and there, but not at a systemic level. And frankly, it's also a big challenge. SME finance still is hard as is, and putting additional policy goals on top of it makes it even harder. But on the other hand, in many of the developing and emerging countries, there will be no sustainable finance without MSMEs, because they make up the vast majority of their economies. So it's early days. However, there is an increasing number of players that are becoming aware of the issue, and they are taking steps to tackling it. And today we have three panelists who will tell us about their experience with this new and emerging field. First, we have Fulvio Capurso, team leader of guarantees and private investment in DG NIR of the EU. The other guest is Andreas Berghoff, senior loan officer at the European Investment Bank. And then we have Johanna Neiman, head of inclusive green finance at AFI. Before we start the conversation, though, I wanted to feel the pulse of the audience with the polling questions. So I hope you all know by now how the system works. And can we please pull up the polling question for the audience?
It's been sent, Mr. Klaus. So
yeah.
Now they can answer, yes.
Okay, so the first possible answer is, so the question is, sustainable finance needs to focus more on SMEs. It's a statement. And the three possible questions are, yes, without bringing SMEs on board, we will not be able to reach the SDGs. The second question answer is no, big corporates will determine if the SDGs are met. And the third possibility is, it's probably a good idea, but not a priority. So please answer now. Sustainable finance needs to focus more on SMEs. Yes, no, or somewhere in between, medium. We have 1 minute, more or less, to answer this question. Please vote now. And then we see how the audience feels about integrating sustainable finance with SME finance. We have some time to give the system the necessary time to react. I hope you can all vote. And don't know if the results become ready soon. Please let me know.
We are getting the results. Just 1 more minute.
Okay, I'm just hearing half a minute. Still time to wait for the results. Again, the question is, sustainable finance need to focus more on SMEs? Yes, no, or somewhere in between. Probably a good idea, but not a priority. Let's see how the audience feels about this new and emerging field before we start the conversation. Maybe while we're waiting waiting for the answer, I also want to encourage the audience to feel free to post questions through the chat. It would be great if we, at the end of the session, also could answer questions from the audience. I can see them here in the chat. So I see there is an answer, and the overwhelming majority, that's a surprise, feels that yes, we need to bring together SMEs and SDGs. I didn't expect that strong of an answer, but it's very clear how the audience feels. Thank you very much for this initial impulse. Okay, but so let's start with my panel. And the first question goes to Fulvio. I hope you're here, Fulvio. Let's start with the big picture. You work for the EU Commission in DG NEAR. What are the EU's objectives on sustainable finance and on MSME finance generally, but also in your region?
Thanks a lot, Klaus, and good morning, everyone. I should say probably good afternoon, and thanks a lot, to the Union for the Mediterranean and for GIZ for inviting me. Well, the topic of the panel is really challenging and absolutely very interesting. You're basically asking me to provide the big picture, and so I would start from a very basic assumption, which is the fact that climate change and environmental degradation are existential threats for the EU and to the world. And this means that you mentioned the Green Deal. The Green Deal is a set of policy initiatives that were adopted by the European Union in December 2019, precisely to overcome these challenges. And that the Green Deal will aim to transform the EU into a modern, resource-efficient and competitive economy. This means delivering 3 objectives. The first one is no net emissions of greenhouses by 2050 within the EU, which means that the EU is going to become climate neutral, boost the economy through technology, green technology, and creating sustainable industry and transport, cutting pollution, but also leaving no person and no place behind. And this is something I really want to stress, because I think is crucial in the discussion that we're about to have. The Green Deal, the EU Green Deal, is about green transition, but it's about just transition. It's about economic and social inclusion, as you also mentioned in your introduction. If we look beyond the European Union, if you look at the world, Well, it's clear that the green transitions that everybody's talking about require significant shifts of investments, of public and private investments towards emerging markets and developing economies. We have to ensure that supporting the recovery plans worldwide, and that these recovery plans, they integrate objectives and that refers to low carbon transition. And this will be extremely helpful in building stronger resilience and prepare, the economies in our partner countries against future shocks. We've heard several times about the SDG financing gap. The green financing gap is, the global green financing gap is estimated into a region between $2.5 trillion to $4.8 trillion. No matter what the figures, we understand how big the challenge is. The activity, the actions that needs to be taken are to mobilize sustainable finance at a large scale, and particularly private finance, and this is where sustainable finance is crucial. We have to do this while addressing the volatility of capital flows, because what we have registered, particularly in our regions in the Southern Mediterranean, but also I would say in the Western Balkans, is an outflow of capitals at the moment. The COVID crisis hit. And we have to be sure that these flows of capital that are sustainable, they should address the real economy. This is where sustainable finance needs to work for SMEs. And I think, the survey and the poll that you just launched and the reply that we get, it goes clearly into that direction. We need to work to adapt the regulatory framework, because in order to make this investment sustainable in the long run, we need to have the proper business environment. We need to have the proper regulatory framework in place. We need jointly to work to build pipeline, because what we usually hear is that investments are not flowing precisely because there is a lack or a shortage of bankable options. And in addition to all this, we need to build rigorous systems to track and assess investments and to be sure that we're talking about green investment. So this is what the EU taxonomy is about, avoiding greenwashing and ensuring that we're really talking about supporting those investments that are conducive for the green transition. Let me spend a few last words about the regions that we cover. As you said, I work for the European Commission, particularly for DG NEAR, so we cover the EU neighbored and enlargement countries. Well, let me be very clear here. There cannot be any effective green transition for the EU without our neighbor fully on board. And this is particularly the case for the pre-accession countries, for the Western Balkans economies and for Turkey, but also for our neighbor countries, because their economies are strongly interdependent, interconnected with ours, and we need to share our green strategies with them. And this is why the Green Deal and the principles of the Green Deals are embedded in the recently launched new agenda for the Southern Neighborhood and the relevant economic and investment plan, and on the Western Balkans economic and investment plan that was adopted by the Commission October 2020, and the Green Agenda for the Western Balkans 6 that was subscribed by all the countries in the regions. Both agendas, they set priorities, they identify flagship investments initiatives that we as a European Commission intend to support, but also they define three, let's say, key principles. First, we need to support sustainable long-term socioeconomic recovery and job creations. We need to support our country increasing, their resilience towards to external and internal shocks. And I really liked what Thomas De Luca mentioned this morning when he said we cannot afford to have another policy debate when the next crisis hits. It will be too late. The second principle is that we need to join forces with our partner countries to fight climate change, to decrease harmful emissions, but also to use resources in a sustainable way and to speed up the green transitions. But also we need to look forward, and we need to prepare for long-term scenarios when new forms of low-carbon energy will gradually replace fossil fuels. These are commitments that we as a European Commission have taken with our partner countries, and then, as I said, our commitment that involves the government, involves the economy as a whole, and has definitely an impact on small and medium enterprises.
Thank you, Fulvio, for being very clear. EU has some very ambitious goals, showing leadership on the environment, but also on an inclusive recovery. And clearly, there is a need of crowding in private investment and collaborating with the EU's neighboring countries. Very clear. Thank you very much. So let's move to Andreas. Andreas, the European Investment Bank has provided substantial support to SMEs in the region under its Economic Resilience Initiative and COVID response. But recently, we've also been hearing a lot on the EIB becoming a climate bank. So what does that mean for your portfolio?
Yes, thank you, Klaus. Excellencies, ladies and gentlemen, it's a pleasure for me to participate in this esteemed panel, which is looking exactly as you put it in your introduction at bringing these two anchors together, SME finance and sustainability. So on the Economic Resilience Initiative, economic resilience has indeed been the key theme of our support to the region over the last couple of years. Sustainable and inclusive growth and creation of job opportunities are key for making economies less vulnerable to external shocks and thus create resilience. While the trigger of our economic resilience initiatives was the Syrian refugee crisis, we found out that actually the recipe required for the response to the COVID pandemic is fairly similar. Long-term financing at attractive rates, credit risk guarantees that we had already heard about today, and technical assistance. However, the support had to be provided in an even more flexible and timely manner to make sure that the businesses survive the difficult period. And we have therefore not only scaled up our lending support during the last year to a quite impressive and I think unprecedented level in the Mediterranean countries, but we've also introduced special COVID measures to our contracts, for example, to reflect higher needs of working capital during this period. In fact, business and financial sectors have turned out to be remarkably resilient in most countries, also thanks to interventions by governments, banks, and the international community. And honestly, whenever I look into those countries that I'm working on as a loan officer, I'm seriously impressed by the dynamic and also really the level of resilience that these companies have shown. So some have adapted quickly and managed to turn the crisis into an opportunity. But I think what we also see very clearly as a multilateral development bank is that the own financial reserves of enterprises have decreased significantly during the crisis. So at least during the early stages of the recovery, investments will have to rely to a large extent on other sources of finance. I would now like to come to the second part of your question, the EU Climate Bank announcement. So the EIB has set out a climate bank roadmap, which sets a very ambitious agenda, including the Paris alignment of all our lending operations starting from 2021, as well as an increase of our climate action and environmental related lending to 50% of our lending by 2025. Just as a reference, so far that percentage was more around 25. So we're really talking about a massive game changer. Greening the financial system is defined as one of the focus areas in the Climate Bank roadmap. And there are several work streams with an immediate relevance on our SME portfolio. I'll speak about that a bit later. We aim to accelerate the transition through green financing, which includes increasing investments, promoting innovative green technologies and business models. Secondly, and Fluvio mentioned that as well, we aim to ensure a just transition for all, focusing on those most impacted by the transition. Third, we aim to ensure that all operations inside and outside the EU are Paris aligned, as I already mentioned. And fourth, the roadmap also touches strategic coherence of our approaches and procedures, including, for example, an integrated environmental and climate social policy. Indeed, the economic recovery is also an opportunity for us to do things differently and to promote a greener financial sector. And given the importance of the SMEs in the in the private sector of the Mediterranean countries, I can only concur with Fluvio that we cannot achieve our climate objectives without winning the EU and neighborhood as our partners. And we also have to recognize that, let's say, there are a lot of links between the neighboring countries and the EU, for example, when we talk about local companies that play an important role in value chains of European multinational companies with ambitious sustainability commitments. So I think the EU and the Mediterranean countries are very closely tied in that question, and I look forward to our further discussion.
Andrea, so this seems very aligned with EU policies. You work on inclusive development, but also have an ambitious reform agenda to turn lending more green and aligned with the Paris Agenda. So now let's turn to Johanna. Johanna, you work for AFI, the Alliance for Financial Inclusion. That's a network of policymakers that aims to advance financial inclusion, as the name says. So AFI has been working on SME finance for a long time, but recently you came up with this concept of inclusive green finance. So from your perspective, what is the connection between financial inclusion, also for SMEs, and climate action?
Thank you so much, Klaus, for this introduction, and a big thank you to the Union for the Mediterranean and GIZ for inviting us here today. Andreas and Fulvio, thank you for these introductions from your side, and it's really a pleasure to engage in this conversation with all of you. So as Klaus mentioned, the Alliance for Financial Inclusion, we're a network of 100 central banks and financial regulators from developing and emerging economies. And the regulators in the network started linking financial inclusion and green finance already back in 2015. So it's clear that climate change is hitting the most vulnerable in our societies the hardest. Climate change, it deepens poverty and feeds into existing vulnerabilities. But the other side of the coin that we are working on is that financial inclusion, it can build the resilience of individuals to the impact of climate change, whether it's to a sudden or extreme climate event, or to the gradual effects of varying rainfall patterns, sea level rises, or salt water intrusions, just to mention a couple of gradual climate change impacts. But also access to formal savings, credit, insurance, money transfers, and new digital delivery channels, it can provide vital support for those managing these new environmental realities, as well as empowering MSMEs and individuals to reduce their own negative impacts on the environment or their own contributions to climate change. So in this way, also contributing to climate change mitigation. And this is indeed really crucial when we talk about a green transition or a just transition, as Andreas was mentioning earlier. So really to empower the most vulnerable to move towards more green solutions, but also building their own resilience against the impact of climate change. And I'm really happy to share that there's a great interest and a demand for inclusive green finance policy solutions amongst the financial regulators in the AFI network. And there's a lot of opportunities to engage systematically on this topic. And it's quite clear that financial regulators have not been the main actors in the climate space this far. And there's a lot of work to be done to connect both on the national level and the international level financial regulators, central banks, into ongoing policy processes such as national climate strategies, but also nationally determined contributions and national adaptation plans. So this is what we're working on in the Alliance for Financial Inclusion. Our inclusive green finance work stream, it empowers central banks and financial regulators to play a vital role in national dialogues of climate strategies, and enabling policy development through the provision of tailored capacity building, policy advisory, and in-country policy implementation support, and all the time focusing on the intersect between financial inclusion and green finance, and how access to financial services and products can, one, build the resilience amongst the most vulnerable, and two, enable their own mitigation of their contributions to climate change. So that's an introduction of inclusive green finance, and really looking forward to sharing some more concrete examples later on in this discussion. Thank you.
Johanna, you're right. Central banks weren't at the forefront in the beginning, but increasingly joined the stage, and AFI has been one of the leaders in this space to bring central banks more into the discussion, and also to bring the discussions on sustainable finance together with financial inclusion and SME finance, which is to be commended. Great work. So, but now let's go back and explore how this works in practice. And let me start again with Fulvio. So Fulvio, you mentioned the use goals of advancing sustainability and inclusive development, including SME finance. So how, if at all, can you bring those two goals together in the tools that you employ?
Thanks, Klaus. Well, actually, I would say in DigiNear, we've been combining SME finance and green finance for the last 8 to 10 years. Let me just mention that in collaboration and coordination with the Union for the Mediterranean, we work to promote integration of the Mediterranean energy systems and market, enhancement of energy security, promotion of renewable energy and energy efficiencies. I mean, the Union for the Mediterranean 2016 launched 3 energy platform, and there is the UfM renewable energy and energy efficiency platform, which entails numerous examples in terms of sustainable finance. And you recently, I mean, you just heard in the previous panel about Christophe talking about the MSME program. As far as broad MSME finance is concerned, in the last 8 years, I mean, only if we consider only the southern neighborhoods, we have contributed with something around 560 million euro to projects, we as the European Commission generating more than 5 billion in investments for small and medium enterprises. And this includes more than 200 million of our contributions to projects supporting MSMEs in energy efficiency, renewable energies, as well as in green technology as a whole. I can only mention here a series of facilities, the Green Economy Financing Facility, the Green Growth Fund, the SUNREF, Sustainable Use of Natural Resources and Energy Efficient Finance. We do this with our implementing partners, which are the EIB and all other European Development Finance Institution and international financial institutions. On top of that, in 2017, we launched the European External Investment Plan with a financial arm which is called European Fund for Sustainable Development, the EFSD, which has for the first time the use of a budgetary guarantee of 1.5 billion euros to support private sector investment in sub-Saharan Africa and in the EU neighborhood, I mean the southern neighborhood and the Eastern Partnership countries. Out of that initiative, we've signed 15 guarantee agreements with the different international financial institutions, and 4 of them, and up to my mind, cover SME finance and financial inclusions, and I think 3 or 4, if I'm not mistaken, cover renewable energies, for example, or climate-related investments. We plan to do more in the future. We are working on that basis. That for us was a test, and we are, let's say, working to have an enhanced firepower to support investments and green investments, and particularly those that support SMEs. A couple of weeks, last week, I think, the NDCI regulation establishes the Neighborhood Development International Cooperation Instrument, established the possibility for the Commission of providing a budgetary guarantee, so a guarantee backed by the EU budget of 53 billion euros. A big chunk of this will be used to support the EIB investments in our partner countries, but a part of it will be open, I mean, also not only to EIB, but also to other financial institutions, indeed, to support in public and private investments. And the Green Deal that I mentioned before is going to be at the core of this new initiative. We are just starting now. We are in a programming phase. If I can make couple of examples of how this could work in the green space, let's say, we can go from de-risking investments in renewable energy projects, I mean, provided by SMEs, even in markets that are particularly difficult or where the sector it's too new, I mean, to be perceived to be properly assessed and the risk to be defined, I mean, by financial intermediaries. We can cover the so-called off-taker risk, so we can backstop power purchase agreements. We can credit enhance green bonds, public or private green bonds. we can support energy efficiency investment, and we, of course, we can use this enhanced power, to mitigate the risk associated with introduction of new technology, because the green transition will mean introducing new technologies, new processes, productions. We could use the guarantee for that purpose. As I said, we work with IFIs. We're very happy to do that. Yeah. But our intention, and this is also what we've done already under EFSD, is to move closer to companies, so working with local financial intermediaries and other partners that that address small and medium enterprises in our partner countries.
Okay, thank you. 53 billion, that's indeed enhanced firepower to integrate, to foster the integration of sustainability with MSMEs. Very ambitious project. Thank you very much for that. Similar question now for Andreas and for your context. You described the challenge of turning 50% of the EIB portfolio green by 2025. And this means that a good chunk of the SME portfolio will have to become green too. So what are the approaches specifically that you think will take you there?
Thank you, Klaus. It's a very interesting and relevant question. So first, let me start off by saying that as the EU bank, we're fully committed to the EU's policy first approach. So that means that based on the market gaps that we have identified or are identifying at the moment, together with the European Commission, we then design a strategic approach that delivers on policy objectives in the most efficient manner. So we really come from the impact side, and then we backward engineer kind of the tools that we require. And indeed, the NDICI regulation provide us with a lot of firepower and opportunities. So as a first immediate step that I wanted to mention, and that I've already mentioned before, we've started with a Paris alignment of all our intermediated operations from 2021 onwards. So how does that work? We have updated our eligibility criteria of our loans to SMEs to ensure that the bank will not support operations under the allocations of our funds that are detrimental to the achievement of the Paris Agreement. Then secondly, turning 50% of our portfolio green by 2025 is indeed a huge challenge in case of SME lending. In fact, our experience in the Mediterranean countries with dedicated credit lines has been rather mixed so far. Our loans already come along with a lot of strings attached with regard to eligibility of projects, costs, counterparts, and the application of EU standards with regard to environmental and social standards, compliance, procurement, and so on. So there was little interest on the side of the partner banks who already struggle to provide SMEs with access to finance in general. So again, it's where these two dimensions that you mentioned in your introduction meet. Therefore, an obvious approach of dedicating the entire loan or a part of it to climate action and environmental sustainability is really not easy. It will require, we are going that way, but we feel it will require substantial technical assistance, and it should also be accompanied by appropriate incentive schemes and guarantee schemes. It will also require complementary interventions on the public sector side to create awareness and stimulate market demand. So I think here we are working very closely together with the European Commission. And it will involve product development, including green bonds, green loan products, equity funds, thematic transactions, or demonstration projects, maybe even venture debt. So I think you'll see a lot of product development. We are also looking, I think that's an interesting spin that Johanna had also mentioned earlier. We're also looking into greening the financial system as a whole, so not just on the transaction basis. So this includes, for example, technical assistance that assist local banks in developing and implementing a climate strategy or an action plan, and to comply with the regulatory reporting requirements when it comes to sustainable finance. We also support the NGFS and the European Commission's International Platform on Sustainable Finance that Klaus, you mentioned during the introduction remarks. and where we have an observer status. And based on that, we are now considering to engage more directly also with central banks and regulators in our partner countries. Finally, we also actively seek to transfer our knowledge in the area of climate and sustainability awareness bonds to other potential green issuers to help them develop the market and market the products. That's it from my side.
Yeah, well, thanks a lot, Andreas. I think it's very interesting to also hear, a challenge sometimes where things are still difficult. And as I said, MSME lending alone is hard enough, and putting additional goals on top of it might even sometimes put a disincentive for some banks to avail on green credit lines. But I also find it very important, the one point that you mentioned on the necessity of capacity building on technical assistance for local banks, but also for the regulator. I could not agree more. Oftentimes when I speak to regulators, the number one feedback that I get on sustainable finance is that they need capacity building for themselves at the regulatory level, but also for their respective financial sectors and the banks. So I could not agree more. I might add that GIZ also stands ready to respond to the demand of partner governments in that space. Let's turn to Johanna. So you described the concept and rationale of inclusive green finance. And since you are a network of policymakers, could you give us some practical examples of policies that support SME finance and climate action at the same time?
Yes, thank you so much, Klaus. And I hope it's okay. I also react first to the previous interventions, because I really agree with what Andreas is saying. The firepower, the investments, it's much needed, but this far there's a mixed bag of results, and in order to green the financial systems as a whole, it's crucial with capacity building and also working not only with the individual banks but also with the financial regulators and the central banks. And what we have identified through the Alliance for Financial Inclusion as a kind of steps towards the greening of the financial system is, well, starting with a change of mindset. And I think we come really far on that globally, both because of the pressures, the sense of urgency, but also both national and global awakening to solutions. Second is, of course, capacity building. And Klaus, you mentioned capacity building of financial regulators themselves and financial service providers. But we're also seeing an increased demand of kind of collective capacity building on the national level, because there's not always an understanding from, for example, ministries of environment of what the role of a financial regulator can be in greening the financial system and how that can feed into national strategies. But also we're seeing capacity building awareness raising needs on the demand side. Because indeed, MSMEs or individuals would not always be aware of the possibilities of what green means or the potential risks they are facing down the line because of the impacts of climate change. So it's really quite a large package to address. After the capacity building, it's crucial to establish the coordination mechanisms on the national level, because when it comes to climate action, it's so important that we don't kind of start solving the issue from different sides. I mean, this is obvious, but it's so important, and now is the moment. The next two steps. Yes.
Can I maybe just quickly react to this before you
Absolutely.
ask the question? Because I think it's such a crucial point that you so eloquently make. These reforms are national endeavors and require the collaboration of the private sector and government all together. And I could not agree more with you. I just wanted to add that GIZ recently put out a tool to approach sustainable finance policy reform in a country. And it's called the Sustainable Finance Policy Navigator. We did this together with the Frankfurt School, and it's online. Look it up. It gives actually guidance to policymakers, but also donors to approach this very complex task. Sorry, Johanna, for interrupting, but I just wanted to plug this little thing. Thank you.
No, thank you so much, Klaus. And that also demonstrate not only on the national level that we need coordination, but there are so many different actors in the international space that work with these issues. And I think we all need to learn from each other as well. So thank you for that point. The last two points in the kind of greening of the financial system nationally that we work with It's related to defining what green finance means in the national context or regional context, and then of course the strategic approach and policy development. So that brings me to the concrete examples, and it links quite nicely to what Andreas was mentioning in terms of capacity building. One very recent example from the AFI network is we've been working with the Financial Regulatory Commission of Mongolia in providing trainings for 120 non-bank financial institutions on what green lending might mean in the Mongolian context. This is also based around the Mongolian green finance taxonomy. So it's really a perfect moment where the definitions are in place to build the capacity of the non-bank financial institutions to encourage them to lend more for MSMEs for green purposes. Some other examples, just briefly to mention, is the Central Bank of Egypt has recently provided a facility for loans with reduced interest rates to small-scale farmers for investments into better irrigation systems, but also for bakeries to switch to ovens powered by natural gas. So these are some of the very concrete examples, but the trend we also see is having a more strategic intervention to inclusive green finance. So integrating in national strategies or, for example, national financial inclusion strategies. And of course, we have quite a number of concrete examples that I'm more than happy to share with the participants here as well. So thank you very much.
Okay, great. All right, so we're advancing in time in our session, and there's still some 10 minutes to go. So Fulvio, last question to you. What's ahead? What are you planning for the future to pursue SME finance that supports sustainability goals?
Well, thanks. Yes, I have already referred to the expanded capacity in terms of how we intend to support investments, right? In terms of blending, what we call blending, where we combine our grant resources with investments coming from international financial institutions and private sector, public sector investments, and the use of budgetary guarantees. On this, let me stress, and I'm very happy that Andreas mentioned that we're going to work on a policy first principle. So the famous 53 billion euro that I mentioned will be part of the programming exercise. So this will respond to policy priorities that we establish with our partner countries in the dialogue that we have with them. And it's a dialogue that involves governments. It's a dialogue that we want to involve local business associations, particularly when SME finance is concerned, of course, the Union for Mediterranean, financial intermediaries. This afternoon, I'm going to have a discussion with the European Mediterranean Guarantee Network, because indeed, identification of priorities will mean to set the criteria for the use of the guarantee and for the investments to happen. But a second point, which is equally, if not more important, and both Joanna and Andreas have really eloquently expressed this, is the work on the market infrastructure, is to work on financial markets and capital market development. Greening finance, I mean, the financial market is an essential element. Development of financial markets and capital markets means to work at a different level in a coordinated way, in a very strategic approach at national level, at regional level is if possible. And this precisely because the ambition is not to provide standalone investments, but to create resilient solutions. So to create conditions for which, based on which, I mean, the investments that we intend to mobilize is going to be there for a long run. As I said in the beginning, addressing volatility of investment, in my view, is as equally important as mobilizing new investments. This means also to work on the business environment and investment climate, particularly and precisely for the same reason, again, with Green Deal approach in mind. So the ambition is to move towards a green transition. And to make this happen, I mean, I really liked what this morning Ms. Naglabar from the EMGN said. We need to think out of the box, of course. And as I mentioned now a couple of times, we have the firepower to do that, and we have the firepower to be innovative in doing that. So we can think, as far as finance is concerned, about long-term and equity solution, long-term debt and equity solutions for small and medium enterprises. We can think about capital market products, but we need to have the capital market infrastructure in place, like bonds or securitizations. We can think about supporting local guarantee schemes because, as I said in the beginning, this will bring us closer, to reach out to SMEs. When I say we, I'm talking about my team, our office, and of course our DG, but I mean even more importantly our delegations, which are our offices on the ground, and that the entry point. For all the work that we do, first and foremost on the policy priorities, but also on the use of the instruments that we have available.
Thank you, Fulvio. So, Andreas, so you mentioned this transformation process of the EIB and also the specific instruments that you employ. But apart of that, what will change at the EIB to make it happen? And specifically, how is this relevant for other development partners that might be in the audience today?
Okay, yes. So the NDICI regulation and EFSD, which Fulvio has been referring to earlier, will significantly change the EIB's operating framework outside the EU. I see it as really offering a number of new opportunities. First, as Fulvio mentioned, it builds on a policy-first approach, and that allows policy interventions and direct private sector financing to work hand in hand. I think this is exactly what we discussed during the session, and I think that I'm absolutely convinced that this is the right way to go. Secondly, it's flexible and allows us to provide a broad range of products that cater to the specific challenges and serve our clients. And third, it facilitates partnership and promotes a Team Europe approach and can also take this to a different level. So the EIB can look back on a long history of supporting the Mediterranean countries in both the public sector and the private sector. So we will definitely continue to support the private sector through different channels, including direct lending to corporates, lending through financial intermediaries, microfinance institutions, and fund investments. We will continue to support economic resilience of SMEs through a package of instruments. First, intermediated long-term financing in hard and local currency, and I think we made quite some progress on the latter in the recent years. Secondly, guarantees and portfolio guarantees covering part of the credit risk of SMEs portfolios, which we see as a very effective tool. And I think there was a lot of mentioning during the earlier sessions today. And third, technical assistance to financial intermediaries, more upstream, but also the SMEs. And we will also explore opportunities to back up public sector efforts to support private sector development. So I think this is something that we've also just heard, to really link those two interventions together. But since you're asking what will change at the EIB, I personally see the EIB becoming much more thematic. I think that the trend that has already started, and I personally believe it will continue, and contribute to its part to deliver on EU external policy objectives, and notably in the areas of sustainable development and climate action. So this will require us to work much closer or even closer together with other development partners. And I'm really grateful to be here today and discuss with you. And I think let this be the start of a closer relationship and cooperation also with the other developing partners.
Excellent. Okay, last question for you, Johanna, and please brief answer because we're running out of time. What's in the pipeline for inclusive green SME finance, and what are your plans for the future?
Thank you so much, Klaus, and I'll indeed be very brief. For us right now, the concept is in place, the policy examples are in place. We're now working with the financial regulators in the network to develop policies and a strategic approach to inclusive green finance on the national level, and that's where we're directing the bulk of our energy. And linked to that, we're looking into a couple of thematic areas. One is also women and inclusive green finance. We know women are disproportionately affected by climate change. How can we address this through inclusive green finance policies? Secondly, how to, in the best possible way, harness fintech for inclusive green finance. And third one, when taxonomies and green finance definitions are put in place, how can we ensure that there are also definitions that relate to individuals and MSMEs, and that they are not left out of this greening of the financial system? So that's our focus in the coming years. Thank you so much.
Thank you very much, Johanna. So now it's time to wrap up our session. Let me just try to sum this up. As the political momentum around sustainable finance intensifies, we see an increasing number of players in this space, and the EU, as you mentioned, has set clear policy priorities and is making significant financial support available for them. The EIB is turning into a climate bank, and financial sectors regulators around the globe get more interested in how they can pursue sustainability goals while at the same time strengthening SME finance. And I am convinced that greening SME finance will become a new thematic trend. Today we've heard some approaches from my panelists, but I think globally still there's a lot to learn and a lot to aim for. You might have already seen that the next Global SME Finance Forum in October was announced under the theme Greening SME Finance. So there's more to come. And I personally and GIZ as my organization are looking forward to be part of this conversation going forward. So thank you to my panelists. Thanks for the attention to the audience. And now back to the moderator.
Thank you very much for this great panel. This was a fantastic last panel, to be honest. We have listened to many approaches to sustainability in MSME finance, and it is time for the closing remarks. But before we do, I invite you to watch one last video, and then we take it from there. All right, so it is the time indeed for the closing remarks after a long day of exchanges and insights. And for this purpose, I'm very glad to welcome Mr. Haider Al-Baghdadi from the Financial Inclusion for the MENA region at GIZ. Mr. Al-Baghdadi, I know it must be a very challenging task now to try to come up with the closing remarks. But well, whenever you're ready, the floor is yours.
Yes, thank you very much, Mohammed, for this nice introduction. And indeed, this is a very challenging task, especially also the last session. I have to say, I'm green finance. I'm still a learner, still a beginner. So I was taking notes, and yeah. But I think the whole day was really super interesting. And first of all, I would like to say thank you very much to all participants for your attendance. I hope that you liked it as much as I did. There were so many insights, so many learnings and knowledge shared by our speakers and moderators. So I really would like to say thank you very much to all the speakers and moderators for your contribution and for sharing all your insights, wisdom, and knowledge with the broad audience here. I would also like to say thank you, of course, to the UfM, Union for the Mediterranean, for hosting this great conference. And also thank you to His Excellency, Dr. Kamal, for this very nice introduction and welcome words. I would also like to say thank you, of course, to the organizing team of UfM and GIZ. I think without you, this conference would not have taken place. So thank you very much also to the organizing team. Coming to the lessons learned, and now I really have to take a deep breath because there was so many information and insights. So first of all, looking at the current situation, I mean, what we knew before the conference, but it also holds true now and also after the pandemic, that MSMEs are the main contributors and drivers to growth, economic growth, inclusive growth, and also employment. So they have been hit hardest by this pandemic because of liquidity shortages, because of bankruptcy cases. And I also want to cite Naglaba, who said, the real impact we still have to see. And that scared me a little bit, I have to say, but probably she's right. So we have to see in the future about the real impact. We also learned that despite all efforts, support from policymakers and governments came partly too late. We heard that due to a survey, actually before the pandemic, that MSMEs, they had a cash buffer of that were lasting for 60 days. And a lot of support came only after 60 days, sometimes 12 weeks later or even later. So many MSMEs didn't make it. This is due to various aspects. One is that there's a legacy legislation that, for example, does not allow for e-signature, that really hampers the fast procedure of support. Then the other problem is we learned that also banks need to, and banks and also other financial service providers, not only banks, they need to invest in their infrastructure, in their technical infrastructure. But even when they had like digital infrastructure in place, the huge demand really overwhelmed many banks. So what they would need to is to further invest in technology and infrastructure. Also policymakers, we learned, they all need to embrace technology. That's what was one of the key messages of the conference. We need more enabling environments that allows for, actually remote account opening. We need more open banking systems. We heard that the EU is a quite good reference point with their latest issue, payment directive that allows for open banking. We need more innovation labs, innovation hubs, sandbox approaches, and we learned that there are already good examples in the region with Jordan and actually also Tunisia, for example, just to name two, who issued regulation and legislation that allows for greater digital financial inclusion and SME finance. We learned also that at the industry level, the banks and non-banks need to invest into more remote business models. Also, credit guarantee institutions need to do that. Naglaba said credit guarantee institutions, they need to change their business model. They need to embrace technology to be able to provide guarantees much faster and in a technological or in a more technological way. Also, looking at the challenge of credit guarantee institutions, that maybe at one point government support will exit and they will also face huge non-performing loan problems. So we have to see in the future how successful credit guarantee institutions will be. We learned equity guarantees, equity finance is quite important. Also for credit guarantee institutions, for business angels. We heard Tarek from the Mediterranean Angels. They have been also hit very hard. Their investments went down because we learned that when it comes to early stage investment into startups, the physical contact, the trust if you invest into a young company is really needed. And that was during the pandemic very difficult, of course. And we hope that after the pandemic, this will change. What is needed is spurring innovation, creating environment for fintechs, for startups. We learned about there's a new digital bank, a fully digital bank in Algeria, which is really, really great to hear that. We heard about another company that they are using big data and alternative data to actually support banks to better reach out to their customers. So there are very promising initiatives at the policy level and at the industry level that makes us optimistic that we all build back better. And talking about build back better, the last session was on sustainable finance. It was super interesting. I have to agree. There are different initiatives. We learned about greening the financial sector, green financial inclusion. These are both very different initiatives. We learned that the EU is a leader in a way with the Green Deal, a very ambitious Green Deal to achieve zero emission by 2025. We need MSMEs on board for this. We can't do that without MSMEs. We learned that the EIB, Klaus said it already, Mr. Klaus Prochaska, is the leading green financial bank, or is becoming the leading green financial bank. They invest in new technologies. They provide guarantees to give incentives to invest in green sectors. And they do many other things. Talking about green financial inclusion, what is very important that central banks actually provide an enabling environment that allows individuals and also MSMEs, enterprises, to get the right financial services to better deal with the climate change impact. Yeah, I think this is also very much needed. And if you look at greening the financial sector, green financial inclusion, what is really needed, it was pointed out many times, technical assistance is needed at the level at central banks, but also at the level of the financial service providers, for example, to help banks to develop the right green products, green loans that helps MSMEs, for example, to use energy efficient technologies, for example. I think I want to stop here. I think there are many more lessons learned. I think all of you in the audience, you have your own lessons learned. So once again, I would like to thank you very much for your attendance, for your patience, and thank you. And I would like to give back to Mohammed.
Excellent. Thank you very much, Mr. Al-Baghdadi, for this brilliant wrap-up. And thank you all for joining us today in this event. The truth is, this concludes the conference for today, but please mark my words. MSME development is an absolute priority for our work at the Union for the Mediterranean and at the Secretariat of the UFM. So this means that we will hopefully see you again in another event dedicated to SME development soon. And in all cases, do stay tuned because we have some very interesting events coming up. They are in the pipeline for the coming months of the current year. And from Barcelona, this is Mohammed Al-Razez, wishing you all a great day and hoping to see you soon in other UFM activities. Stay safe and have a great day. And thank you very much.